All right, we've got another stream happening again. It's Q4 2024 results for Palantir. I can't believe we're already more than a month into 2025, but I'm glad to start off the stream today. We got some, I guess, things to cover beforehand, get our minds really up to date on what's happening recently for Palantir, but also keep in mind that, it has been a full quarter here. So just to review some of the numbers as well as the diagrams and the presentations from last quarter. I know I did put out a video a couple days ago, so if you go to the channel, if you just kind of want the speed run and you'll just wait till the earnings call at 4 o'clock or when the results come out after market hours closing today, and I'll go through those details later. But yeah, you can really just go onto the channel and essentially just get like a 10-minute rundown. I just focus on the presentation of the numbers. Of course, you can go through the quarterly updates here. Seeing a few of you already trickle into the chat here. It's great to be on, right? It takes a quarter for me to live stream, but thank you all. Welcome. I'm just letting everyone know if you do want like a quick catch up, I'll do it live as well here with some little added more recent news and focus on especially the SARs. I know there's a lot of questions around that and the possible effects onto earnings, but if you just want some of the quick numbers here, just go to the latest video for that. There was some other news recently too, which was kind of interesting with Morningstar, as well as Cleveland Clinic that I do want to show again. I know not a lot of folks watch this kind of information, which is fine. It's just one of the nitty gritty stuffs here, but I did want to rewatch this video with everyone because I really believe that healthcare is one of the biggest market opportunities for technology to overcome. And Palantir, of course, being a part of that. I work in the sector myself on the technology side. So there's a lot to cover here. And I know there's a lot of things that people need to remind themselves on the numbers. So, and also for a refresher too, I know you can't keep up with every single piece of news here, but Palantir. So for today, this is for the folks who are just getting in. Thank you all for showing up for the live stream. These are for full year results of 2024. As well as the quarter of 2024, Q4 2024. And they're releasing today after market close. So for me in Chicago, that's 3 p.m. Market close. Now, we know there's going to be a little bit of wait. We refresh it. You know the drill, right? If you've been here for the past few live streams, it doesn't come out right at 3 for sure. We give it some time, refresh the page, even check out some other channels. And people with Bloomberg terminals too, especially on X, they'll post that stuff before we get the official updates onto the websites. But you know the drill, right? I'm going to be over here pressing Control R, looking for that nice additional tabs here. And then also on the call, I'll shut my mouth essentially at 4 o'clock. Palantir is pretty good on being on time. So management gets their live stream started at 3 p.m. Mountain Time or 5 p.m. Eastern. For me, that will be 4 p.m. Central Time for those who are used to that kind of timing there. So I'll be quiet for that. I'll take notes. And afterwards, we'll do a recap of the call per usual. And for those who don't like sitting on the live stream, I know it's a lot of information coming at you live. And, I'm the same way where I like to digest it. Right after the call and the live stream is done, I'll essentially just be working on a video recap. And hopefully I can get that out by tonight here, condense it down. I really do like to focus on the presentations by management because it's really what they want to portray. Obviously, if you go into the actual earnings quarterly report, that's filed with the SEC, a lot more detail there, more breakdowns of numbers, especially if, not saying they're trying to hide something, but if they're not trying to highlight certain aspects of their performance. So, but yeah, I'm very excited for another round of earnings. And, to sum it up, I think the big thing everyone's really going to be looking for, what's guidance? What's their top line number of revenue? Are they growing faster or the same, or did growth slow down? And then also, like I mentioned with guidance, are they expecting to grow faster into this new year? We know there's a lot of current events like the administration coming in already doing a lot of new actions that some people are saying is great. Some people, kind of mixed bags. For example, the tariffs of most recently, everyone's talking about that today. Does that affect Palantir, a software company, America focused? Who knows, right? And how it would affect them in certain ways. Maybe their customers, that would be a big impact. It can motivate them to find more efficiencies. But, it can also Maybe it just eats into their bottom line where they just can't invest in technology, right? But that's kind of the short-term mindset. And there's a lot of unpredictability, and it may not actually hit. Well, it's not going to hit evenly across the board, right? So very interesting stuff. And then I also mentioned the new administration, Doge trying to cut government spending. Palantir is a very big player in that aspect, as we all know. So we'll just see how this all plays out over time. And honestly, if you've been around long enough and just living life and living in the same country, a lot of these macro events do tend to trickle out and even just become blips over a longer term or longer time period, right? But at least from my experience, living here for a few decades on this earth, it can point the trajectory, right? So a little change today can compound over time in either direction. That could be growth, stagnation, or decline. So we'll see how these play out, and we're never going to know what happens right in the short term. But yeah, so for the earnings preview today, I've already mentioned that information coming out. I know there's questions around the results. They're going to come out after market close, 3 p.m. Central Time, probably 10, 15 minutes when things load up, and then 4 p.m. is the call. So I think a lot of folks are interested in getting caught up on what were kind of the big highlights before we hear the numbers. So just to start out, I know the CEO letter really is condensed, but from last quarter, so you can see this is from CARP, November 4, 2024. This is only the beginning, right? And he popped out the big 30% chart here. So on a quarterly basis, this was the goal, and people want this. We were thinking we were getting this, honestly, when they were going public through their direct public offering or DPO. But 2022 was a different beast here, and they found their way out, honestly, with AIP. So this is honestly the biggest narrative I think a lot of folks, Wall Street, retail included, even just people who don't own the company and just want to see what's happening with their growth in general. Are they going to maintain this 30%? Are they going to accelerate it? So, growing faster, or is it going to be lower, right? And if you do look at the guidance itself given from Q3 2024, technically it's not 30%, but we know if they've been sandbagging each time, at least the last several quarters now. I can't even remember a time when they didn't hit their own guidance from management. So that'll be one of the big factors, I think, for earnings already. The other factor I think a lot of folks are looking for, and I'm already seeing in the comments, talking about SARs. So if we go to their quarterly report, so what a lot of folks thinks this will do is going to cut into their margins. Essentially, folks are going to, based on the pricing here, and we'll go into the more details further down, but based on the price action that we've seen with Palantir recently, a lot of these actually hit their metrics. So not the service base, if we go down to market-based awards here. So these are vested upon the satisfaction of market-based vesting conditions. So essentially hitting the price for a certain time period and then unlocking those and allowing employees or whoever got these awards to essentially do what the no, actually it's easier just to show the price numbers here. It's probably faster this way. They have the chart here of the amount that they have. Yeah, so we have a bunch of information here on the SARs and where they're at in the number of awards and what they've awarded out in the latest quarters. So the market vesting SARs is what a lot of people are curious about. So if you see here, actually, we'll just read it here. During the 9 months ended September 30th, so this is from last quarter, they granted these market vesting SARs, and basically they have to hit these conditions here. So for the Class A, they want to exceed $50 within an open trading window. So for those who've been under a rock, and honestly, if you're a longer-term investor, it's possible. Palantir is trading above $80 today, right? So that $50 threshold has already been long surpassed. If we go back 3 months, actually, from last quarter, so November, we were already hovering around there or getting to that point. So after earnings, this is, a lot of that run-up was starting to begin. And, they exceeded this $50 threshold here. But that's not just enough, honestly. If you look further down, you have to see as well that the maximum appreciation is up to $20 per market vesting SAR. So essentially, someone can get these packages if that's part of their employee compensation. If the stock price within an open trading window has exceeded $50, that means they hit the threshold. Now, if they choose to sell, obviously they can wait and see if it hits 70, and we've gone way past that. So, depending on how many there are and how many people actually, I guess, utilize them, I mean, as a person, just put yourself in your shoes as an employee, then yeah, you're gonna exercise it. There's no reason not to at that point. Besides taxable events, everyone's got their own individual financial situations. So there's other things at play here, but at face value, it's like you've hit the threshold. It's there for you, and if you've hit the maximum appreciation, then the sooner the better. So that's something to keep in mind and can be a possible drag and maybe even not change the narrative, I would say, on Palantir, because if you think about it, there's always something to nitpick. And this is similar to the story of, stock-based compensation. This is basically Palantir's way over time, as we've seen, basically putting more stipulations, right? We're not just going to award you stock and, the typical vesting period, you got to put your dues in, all that stuff, right? But here, there has to be some performance of the market, at least. If you can argue too, right, if employees actually have that much power, but as a whole body together, if they all perform, the customers are coming in, they're delivering value, and they're doing so in a financially responsible way, which typically is rewarded in the stock price and reflected. So we've seen this over past quarters here. So we'll see how large the drag is, honestly. And yes, they've at least on the market vesting starts, just so you know. So there's other pieces to the puzzle as well with performance base. So I think this will be one of the questions too that came up, if I recall. Let's just bring this up. I did do a video on this as well with the top question, so it's always interesting to see what's the top voted one. And honestly, this one was an interesting thought. At least I don't think it's like necessarily has to be serious of like a merger, but at least some focus of partnership and working together with Anduril, SpaceX, all the big names that everyone's recognizing today. So but back to what we were actually here for, I believe. Yeah, so there was a question here, but it was very small, hitting the EPS and how this is going to hit. So it's not necessarily all 120 million here, so I'm not sure why that's actually in the question, but it only got 7 votes here. For some reason, I thought there was another one. Okay, maybe not. But yeah, just in general, we just have to wait and see from management, honestly, because if you're an insider, you already know the information here on the financial end. If you're under the CFO and of course C-suite, so you're going to see what's going to happen there. But over the long term, what I think is more important to see is the continuation and the trending of this. So this is the balance as of end of year for 2023, and then they showed the 3 quarters. So this is everything that's happening over those past 3 months. So we'll get a bigger picture view for the full year of 2024 of the vested and exercisable left. And then we'll be able to see what was exercised, canceled, forfeited, and also what's granted too, right? So this is what I think a lot of people care about. Are we giving out more rewards here? Because, Palantir can technically make the argument that if we're a place people want to work, do we need to have more incentives for people to do that? If you can get the cream of the crop to perform well without needing these extra rewards, as a shareholder on the outside, that's awesome, right? I want people to work hard, paying them the least amount. I mean, that's a very oversimplified way, but also giving them some ownership is also another way of motivation. But we're just trying to say here for the sake of argument that maybe Palantir doesn't even need to accelerate this program, maybe just keep it, just enough that they're giving ownership to employees, but it has to have the stipulations of, the market is going to be a factor in how well the company does, even though you can't say individually you influence the stock price. But other than that, just any kind of award base in general, I think is important. Even for myself personally, I think that's pretty cool. As for myself as an employee at a company, I do have an equity component to it. It's definitely different than just being a cog in the machine, getting a salary. Obviously, nice enough salary, it kind of doesn't matter depending on your personality. But it's probably also the type of people that Palantir is looking to attract for them. And they're working on kind of the biggest problems, government, commercial wise. So you really do want someone with buy-in and not necessarily just trying to pass the time. You know what I mean? So yes, SDRs are going to be a huge component, I think, of the discussion. And if it's not addressed by management, that would actually be very interesting to me, where, we know this is on the top of minds, and most likely, I would think, this is just my thoughts here, it's most likely going to be referred to in keeping their expenses or employee compensation, not necessarily the specific instrument that we're talking about here. So don't be surprised if they don't specifically talk about the market vesting SARs. I think everyone pretty much knows that based on the price points and the recent price action. And of course, the valuation of the company relative to the financials that they've shown, that there's expectations in future growth and qualitative factors definitely playing a factor, especially after the election and the kind of relationship that we see with co-founder Peter Thiel, as well as not necessarily the neutrality of them, but more of the undying support of Palantir's mission to serve the U.S. government, regardless of administration, right? They really want the U.S. to succeed, and that comes across from obviously Karp when he speaks, but even in the activities that they do. Everyone's got their own opinion on what's the right way or whatever they do on that front, but you can't deny that they're trying to serve the U.S.'s best interests there. So that's all I have to say for that portion here. But it's pretty interesting to see what that effect can be, considering I've never felt any apprehension towards them not hitting well on their GAAP net income. It may not accelerate as fast, but I think the trade-off is there based on, how much productivity are we getting, and is the quality of work there where customers love to work with Palantir. So another big piece of news here, I was scrolling really quickly actually on X, and I didn't realize this happened today. So this is similar to actually what Wedbush did too, raising their price target. So, but for Bank of America, and I saw Amit's post here. Thanks for posting that, man. Just earlier today, this morning, that Bank of America raised their price target from $75 to $90 per share. Now, based on their share count, I think it's like 2.2-ish or 2.3 billion outstanding shares. Essentially, we're almost a $200 billion company if they hit that price target. Now, at this point, I'm just going to say for Bank of America, it really feels like that game that with all the analysts are doing, right? It's like, are we going to predict the stock price, or is the stock, essentially, are we just going to go with the flow of the feeling of the market, and then, this makes sense, like $90, regardless if the numbers even do make sense with how fast they're growing. Now, there's a lot of qualitative things that Bank of America likes about Palantir, especially around their government business. So they definitely do a lot more deep diving and more focus on the government side of things. And honestly, that has worked out, if you recall, because for those who've been around for a while, for Palantir, the narrative was lumpiness. And Alex Karp has talked about this in calls before. Essentially, it just means there are some quarters that are not going to be so hot, and some are going to be awesome, right? Depending on the timing of contracts, the awarding of new things coming in, and if something maybe gets cut, or maybe a contract ends up ending up larger than anticipated. Now, going forward, it seems that management has been pretty positive on this, and we've heard this in the past, I think, 2 earnings calls from Palantir, just talking about the work with the government. Now, we have the new administration in. This is the other kind of, for me, it's a wrench, not necessarily have predictability with the status quo, especially with cost-cutting measures. But when it comes to U.S. security and bringing efficiency to that, Palantir honestly seems more of the solution than someone to cut. Maybe another contractor or prime contractor would probably beg to differ, but at least for where Palantir has positioned themselves, it's pretty obvious, I think, for most of us who looked into the company, what they serve and how they deliver value to the government, where it's not trying to add on to the price here. Yes, you'll have to pay for the software, but what are you getting in return? You're spotting inefficiencies. You're spotting ways to save money. You're spotting ways to remove redundancy. When you can do that, you can put a dollar amount to, I spent this much, but I saved this much. Therefore, it's worth it. So we'll just have to see that it continues on, essentially. And if we see any big awards of contracts, that'll be nice to come through. I know for the Titan program, a lot of folks were looking for that, and just making sure that there's different phases of the project. So just keeping up if they move on to the next one. They've already started delivering test vehicles. That was the last big one where they delivered one to a base out on the West Coast. And this is built in tandem with like Anduril, who focuses on that hardware side, but also software side, and then Palantir as well. Because, this vehicle here, it's going to have basic models as well as enhanced models. So I'm thinking those enhanced models may have, additional software needs, or maybe even capabilities hardware-wise as well, where it's going to create some more add-ons for the software component too. So the big thing is see, will they scale and get a big order for vehicles later on? That'll be the big news, honestly, when it comes to Titan. Pentagon confirms they will put in a large order, or like 100 vehicles or something by whatever year. That'll be like the huge next phase, I believe, for that specific contract. But in general, we'll see if Palantir keeps the status quo with other department agencies, not necessarily the military. Those might be looked at a little bit more closely, just considering, at least in my view, the administration views them as possible just add-on costs that, if one department's doing something here, or it's not even needed at all, if it can be sent out to the private sector, then that could just be a loss of revenue there. But I'm still overall positive on Palantir on the government side. And that also brings up a lot of current event news. I mean, everyone knows this as well, right? The DeepSeek market crash for a little bit. Oh, China's taking over AI, all those things. And, it's already been a few days. All these things are going to be, honestly, like I say, they iron out when you look things from a larger macro perspective, as well as, you've been living in this world, right, of America innovates. You have other countries, someone especially like China, not necessarily leapfrogging, but always playing catch up, because, once someone makes the breakthrough, you're making the technology kind of with a blueprint, right? And you could do as much as you can to keep trade secrets and keep things bottled down. But, Palantir plays a role in this kind of world where, for AI, we've talked about this. Alex Karpus talked about this. LLMs are great, right? They're powerful. They also take up a lot of energy. You got to train them, relies on data, things, and all the regulation that can happen from that. And, even understanding how to monetize that. But, having DeepSeek who's saying, oh, we could do something for like a few $1 million, $6 million, and it's just as good or better than what OpenAI has. Like, yes, that would be huge, and that is huge market breaking. Obviously vetting and making sure that's actually the case. Also, not saying that you have to do this, but, for a lot of countries and the way I see the direction of the world going, even if it is a good model, just the country of origin always has those instilled fears around privacy, data protection, all those things that we're used to. And especially if you follow Palantir, it's definitely something you're used to. And, Alex Karp said it himself, and this was even before DeepSeek AI came out, essentially that LLMs are commodities. And Palantir, as the one with AIP, they're managing these commodities, right? I want to use XYZ model. I want to use ABC model, or I want to use a combination, or only for certain use cases. So you can have the best model in the world, but if it's not the best model for the best price for what someone's trying to do, that's already a big factor there. Or just because your model's performing well in one kind of scenario, it doesn't mean that it's going to be a jack of all trades and can do everything at the best possible way. Some people have tolerance for, medium performance because that's all you need, especially if the price point is there for you. But some people might need a very fine-tooth comb for a very specific use case. So it's something to keep track of, and very important. Just making sure that Palantir, in the narrative at least, is one that is kind of managing all this. That's just in my opinion, right? You don't really see other folks going at that angle around, LLMs, who's handling the security, who's making sure that the models are only applying the data that, or only have access to the data that's truly theirs to work with, especially if you're dealing with more like healthcare data. There's a lot of regulation around that. If you're in the industry, right, if you know about high trust, HIPAA in general, there's things to keep track of here, and exposing things to LLMs, honestly, is something that's still going to be ironed out in the world. So even implementing AI is not even clear today on what they're doing. So, but for Palantir, it seems that the market shock has not really affected them, right? And we also know that tariffs also as of recent too, but just a little pop at the price here. We got 83.45. Cool. Yeah, market close in about 9 minutes. So of course we have to wait for Palantir to release their information, but it should be after market close, as we noted here today. Usually it's about 10-15 minutes after. And also the recent news, this one's usually slower, but it should come up on here as well for their quarterly report. You can see Q3 and all the things that we're going to be looking out for. The letter from Karp, this is important in my books because it's really going to show more of what he's focused on. What are the wins for the company? Making sure to showcase actually what they've been actually able to make a difference on in their financial results. So that's just why I really like to see this letter from Karp. And he might even give some tidbits on, other things. One of the letters, I think it was 2 or 3 quarters back actually, where he talked about the revenue per employee. So that's not really something they tout typically. So I think it's pretty interesting to see if he brings up a different kind of metric for us to look at in those points. Now, quarterly report wise, let me see here. Presentation wise. Perfect. Okay. So before going to the Q3 numbers, and I've mentioned here that there's also a video on it too, basically going through the presentation. Just one more thing. So I did also make a video on this. I do want to share this because I think healthcare is probably one of the biggest opportunities for Palantir. I hope they talk more about it publicly. Of course, if you go on X, you can see things from employees. But what I really liked about this is from a few days ago. 7 days ago here. So this is Cleveland Clinic's own YouTube channel, their own CEO annual address, basically talking about the upcoming year, what they've done for 2024. Healthcare is talked about, I would say, for Palantir, but I think it's not like necessarily the most attention grabbing of all the industries, especially when it comes to the military, right? People are very curious about the big jumbo contracts as well as the latest technology that can help warfighters. But, healthcare literally touches lives, and a change in data processes as well as human behavior, which they'll touch on here. I'll give my opinion on that. But let's just watch the video here really quick, and I'll give my thoughts on it as well. Cool. And let me know in the comments if it doesn't sound loud enough.
Cleveland Clinic is not a technology provider, but we work with the largest tech companies from IBM to Microsoft and G42 Healthcare. Each solution we develop will be safe, ethical, and capable of being used at scale. With Palantir, we created a digital twin of our most complex hospital. The goal was to simplify every variable in moving patients through the hospital and make it seamless. This tool, which is now being used by other healthcare systems, is the first commercially viable AI product co-developed by Cleveland Clinic. Take a look.
All right. First of all, the big thing to note here is that other healthcare clinics are using these too, and commercially viable. This is coming from the CEO himself. I think that's a pretty big major thing to point out when it comes to Palantir, that they have a working product today and it's scalable already. So this argument has always been there around Palantir being a consultancy, but scalability, right? They partner up, yes, and it does take some upfront work. And Cleveland Clinic is, honestly, if you're in healthcare, trying to get into the hospital setting, Cleveland Clinic is one of the most prestigious hospitals that you can work with. And Palantir, to do that, it means that they've shown something or demonstrated something a few years back that, trusted them, because they have a big reputation to uphold when it comes to providing the finest healthcare in the world. So not even just the United States. So just keep that in mind there. I had to just put in that extra blurb. All right, so here's the cool video part.
Running a hospital is complex. Physicians, nurses, hospitals, outpatient centers, operating rooms. More than 30,000 patient encounters every day. We are trying to orchestrate all of these moving parts, and they all need to go perfectly. Historically, it's done through spreadsheets, Post-its, phone calls, text messages. With Palantir, we were able to pull all of the data into a single place, a virtual command center that will model the entirety of hospital operations. We have 3 modules today.
Hospital 360 has transformed how we're able to place patients in beds. We're able to do it in a quicker, more efficient way. I can see the predicted number of patients coming in for the day by building, and I can see the number of predicted discharges coming out, and I can see the number of patients who are waiting, either in the emergency department or patients who are having surgery who need beds. It's live in real time. It's learning our data. It's reading the patient's notes and saying that's a potential discharge.
All right. So for anyone who's been into a hospital, even as a patient, it's pretty obvious this is not what is happening at the common hospital, right? Having a full picture view into basically the inputs and the outputs. Yeah, it might seem simple, right? Oh, this patient checked in. Where are they? And then where they're going throughout the touch points of the healthcare system, not even just a hospital, but even their outpatient centers. Maybe they're going into an x-ray, right? Or they're just doing a doctor's appointment, or someone comes in on the ER, ends up in surgery, then they end up in an inpatient bed, and then they go down to another ICU, then they go down further until they actually get healed up, or someone becomes deceased, right? There's a lot of touch points at a hospital, and the big point here is that Palantir is consolidating this for them, and they're able now to be actionable where they can make a difference. That's honestly where a lot of places find themselves, even non-hospitals. You can probably point out to this in your own place of work, where sometimes even just wrangling the data and knowing where the data is kind of still the first step that you're at and still working through. And you're not necessarily going to be able to take action on that until you get that data plumbing done. Palantir essentially, and through co-development with Cleveland Clinic, sounds like they've gotten that full picture view. Now, it may be very specific to Cleveland Clinic. They've had the chance to work with them, and it's their kind of unique needs. But also, there's a lot of things that are not so unique at a hospital, right? And you can bring this up with any maybe healthcare worker across the country. You know, there's a lot of the similar pain points, and later on in the video as well, you'll hear about nurse scheduling. There's a reason why that just keeps popping up, because it's actually an issue in general. So standardizing the way that we can manage scheduling, not even just for nurses, but for surgeries, like at the NHS, they have their surgical theaters, prepping for surgery, make sure patients are ready, like finding a standardized way to handle that can lead to huge efficiencies, not only for dollars, which of course is very important, but also for peace of mind for the patient themselves, the quality of work. You want to make sure the right person's getting everything they need for preparations, and they're getting operated on to the fullest abilities of the person. And if they're dealing with under administrative stuff or headaches, that takes away from it. So let's just keep watching. And I'm monitoring too if the earnings results are coming out too, since we're heading to 3:00.
The nurse staffing matrix, you can actually see where you're overstaffed, where you're understaffed. Everybody had a trusted view of the patient census and the nurse allocation. It results in managing nurse assignments efficiently and effectively, and in a way that's more predictable and leads to nurse manager satisfaction. OR utilization, the objective function is how do we maximize the number of patients and procedures that we can do through each one of our operating rooms. We're trying to make a smart system, trying to model the problem properly. That's work in progress.
This is another way we're innovating around patient care. It's all about helping more people.
It's been transformative, and it just shows you the potential one could imagine managing from ICUs to step-down units to floors to set the standard for being the best-run hospital in the world. That's the ambition.
Awesome. So honestly, Cleveland Clinic is handling the things that they know are issues across the country and the world. These major themes of operating rooms and also nurse scheduling. So as you can see, they're finding a way to find that nurse satisfaction because it leads to a trickle down effect as well in the healthcare system. If nurses are burned out, it creates a shortage of nurses, or people leave the industry in general. Therefore, wages need to go up, or if they can't find anyone, they contract travel nurses. And if you're a travel nurse, or if you've heard of travel nurses, they make a quite higher hourly rate than the normal nurse that's full-time employed at a designated hospital. The big thing there is honestly they have to deal with kind of the worst assignments that people don't want to stay at long term. But still, regardless, that's a huge strain on financial budgets, but also the morale of the other nurses, knowing they're not getting paid as much, even though it's kind of a crappy assignment. But also just in general, they're being burned out because you don't have a good patient ratio. As you can tell, I have some experience with that information, especially with peers who've talked about their anecdotal experiences when it comes to that. But also operating rooms too. So I think the reason why, and this is just my speculation, that they want to tackle something like this is the stakes are higher. So first, financially, surgeries are expensive, right? Equipment, the expertise from the surgeon, all the other things that go with it, general anesthesia, transportation in between, as well as the recovery process and the monitoring if something goes wrong. And then there's a higher chance of hospital-acquired diseases, which can hurt the payment to the hospital. So there's definitely a lot of things that is a high-stakes situation for the operating theater or operating room, depending where you are. So I think Palantir getting showcased with the virtual command center, Hospital 360 essentially, is showing that they're tackling the top of mind problems. And this is probably honestly just scratching the surface. Now, we'll see over time if this rolls out to more and more hospitals. We're looking at the after hours here, just because I want to see if there's huge activity. It doesn't look like any big spike or drop yet. But yeah, I'm also monitoring this, but that's basically the healthcare theme that really caught my attention because, if one of the biggest and prestigious customers in healthcare partner with Palantir, they're showing it off. Maybe they consulted with them before sharing this information, but I think this is pretty cool that they shared this, and it's for all of us to see. So, and they also shared those numbers too in percentages and quantities and how they've improved as well. So yeah, keep an eye out if you like to watch that stuff. I do like to cover the healthcare stuff when they pop up. And now I think we're at that time of the call where we're getting close to the results. And I can even just go on to X here. Well, we could just look up Palantir because Palantir also, I think they're also like a minute or two later. But essentially, they also get their results out here, at least the highlights at the top line. And then it takes another minute or two for the full results to come out. So, oh my goodness, we got 874 people in the chat. I just wanted to show this to you folks. I am not a main live streamer, but this is pretty crazy here to see this. Thank you all for stopping in. I know you're not here for the Zach voice, right? I'm pretty sure you're here for the numbers. But obviously that's once a quarter. So, we'll see. We'll see. But I'd like to think that you're here for the personality aspect of it. So, okay, nothing crazy right now with Palantir. I mean, okay. So it's just funny when I say crazy because we're saying $84 stock price for Palantir. Obviously, people are always going to point to the ratio of like, oh my God, their price to earnings. Oh my God, their price to sales. Like, of course. But that's literally just the surface level analysis there. Now, I'm not saying necessarily, and this is always different for everyone, time frames are a huge role, your risk appetite as well. Oh, there we go. We got a spike, 5%, 6, 7, 8%. I think someone knows something. Let's look for the information here. $90. Okay, 91. We're going here. Okay, $90. All right. I think someone knows something. Let's just go and find this. If anyone in the chat also can, if you find a link to something with results, it sounds like someone has them. Okay. Well, someone put a number here. I just, when it's randomly put up like that, I just like to make sure if there's other sources as well. Okay, these are all a minute ago. Let me see if they link something here. 47%? Whoa. Okay. Trying to get the official. Let's do this first. Here. Close out this extra stuff. Okay, it's not here. Government with Ecuador as well. Let's go to Palantir's site. Or not site, their account on X. Oh, here we go. 11 seconds. Perfect. And it's from the source themselves. So fully trusted. Palantir reports Q4 2024 revenue of 36%. All right. Growth is faster. 36%. They smashed out of the water. They had a higher baseline. And look what happened. They're up 13% right now. Reason is because they are growing faster. And they had a higher baseline too. So that's probably already why. U.S. revenue grew 52% year over year. Full year 2025 guidance of 31%. So they're going to hit the 30% full year growth now for 2025 versus the baseline of 2024. That's what they're saying for their guidance. This is huge. I mean, honestly, that's all you really need to know why the stock is performing the way it is right now. But we also want to see all the information below. So U.S. commercial revenue grew 64%, respectable, 20% quarter over quarter, of course. Now, U.S. government revenue grew 45% year over year. So we knew U.S. commercial was going to be the growth driver, but 45%, come on, guys. This is pretty crazy here. Well exceeds the 30%. But remember, this is concentrated in the U.S., their bread and butter market. Now, as you can already tell from all this other information, if they're growing faster here, 64% and 45%, and the overall revenue is 36%, then obviously international's the one dragging them down. So that's already a given. Generated an adjusted operating margin of 45%, so way higher. I believe it was 30 something. And then increasing Rule of 40 to 81%. This was 68 or 69 or 70% last quarter. Yeah. They are killing it with the metrics. Of course, they're showcasing the ones they killed it in. Generated $1.25 billion in full year 2024 adjusted free cash flow. Tons of money with $517 million, 63% margin in Q4 of 2024. GAAP EPS of 3 cents in Q4 2024 was in line with analyst estimates, and our adjusted EPS of 14 cents outperformed analyst estimates by 27%. They are expecting revenue of 3.74 to 3.757 million. Thousand millions, so billion, sorry. And then $206 to $254 million above current analyst estimates of 3.5 to 3.535. Okay. They did it. I mean, this is the growth that people are wanting to see. Mid 30s, trending in the forward direction. This is going to be a good earnings call. I mean, I already know what's going to happen. It's going to be very feel good. Honestly, with these highlights, it's like, who needs a further dig, right? If you're here for the long term, this is already just a huge piece of evidence of how they're doing. And they just want to showcase the number. They don't even care about showing the growth rate. They're just going to show total revenue here for the Q4 from 608 up to $828 million in revenue, exceeding the 790 that they needed for 30%. I talked about it in that earnings preview call. So $828 million in a single quarter. We're already approaching. So I'm not saying it's going to happen instantly, but we're much closer to $1 billion per quarter now than, I don't even know, when they went DPO. This is like unheard of numbers, but we'll see. I mean, the big thing, obviously, everything's forward looking. People care about the trend continuing and to expand. And you could just look at the graph here. Even if the baseline's higher, the expansion from this quarter to here is already monstrous. And then for the comparative quarter here, that's a lot of money to bring in on a scalable software solution. with a lot of clients. So I'm going to be very curious on how the earnings call turns out, because they're going to be focusing on the things that are top of mind for them as management. So I just want to see that presentation. I believe I think they actually put it out when it comes out on the call. So let me see if they got the headline here as well. Oh, let's see. They got the Twitter post, or sorry, X post. Oh, I must. Well, first I should like this, right? I'm not too active on here. I just repost and like stuff. Mostly on Palantir's channel, but things related to it. Oh, the Business Wire PR, yes. So they get it up usually on Business Wire before they have everything on their own. I just like to make sure I don't miss anything here. Okay. Yeah, Q4 2024. Yeah, this is the headline. We already read through this. And we'll just read this together. So Palantir today announced their financial results, fourth quarter, fiscal year ended December 31st, 2024. Our business results continue to astound, demonstrating our deepening position at the center of the AI revolution, our early insight surrounding the commoditization of large language models. So, did they add this recently because of the DeepSeek stuff? Who knows? But they've already been talking about this. Have evolved from theory to fact, said Karp, CEO. I would also like to congratulate Palantirians for their extraordinary contributions to our growth. They have earned every bit of compensation from the delivery of the market vesting stock appreciation rights, SARs. All right, so they actually did bring it up specifically here. So he knows that people are making money off their employees are making money off the market vesting SARs here. But when they see stuff like this, the actual growth being driven, can you complain, right? We're at 95 per share here, 14% up from closing. Now, Q4 2024 highlights, I believe I already read over some of these, like the U.S. revenue growth. Commercial is growing fast. Same with the government, honestly, at 45% is crazy. 36% year over year, 828. So for the number of deals closed, they closed 129 deals of at least 1 million, 58 deals of at least 5 million, and 32 deals of 10 million. Okay, 32 deals of 10 million is a lot. I believe last quarter's actually was, let's see here, 10 million. I had the presentation up, so it's like, it was 16 last quarter, 36 for the 5, but as you can see here, we have 58 for the 5 and 32 for the 10, and then 129 for the 1, and that's way above all three of these metrics here. All right, closed a record-setting $803 million of U.S. commercial total contract value. Just note for total contract value, right? It could have varying time periods here, but they closed $803 million of business, locked down and signed away for quarter over quarter. That's up 13%, 134% year over year, and 170% quarter over quarter. U.S. commercial remaining deal value (RDV) of $1.79 billion. That's up basically 100% year over year. So they've got a lot of money in the pipeline. Obviously, you got to technically earn those dollars and everything and deliver on the value. But knowing Palantir, a scalable software solution, they're able to deliver this over the coming time periods as needed. So U.S. commercial remaining deal value of $1.8 billion. Customer count grew 43%, 13% quarter over quarter. Okay, this is the turnaround that I wanted to see. So of course, 43% is nice, but that consecutive quarter over quarter, 13%. If you remember from last quarter, it was stagnating. We just go to customer count here. So this is U.S. commercial. Let me just double check. This was for customer count in general. So customer count in general, 39%. And this technically is a lower baseline from last time. But look at this trend. 10, 11, 7, 6. Boom. Now we're at 43%. So bigger already with the higher baseline. And then the 13% quarter over quarter, which is that consecutive over here with the higher baseline. So they are getting new customers. And remember, it's a scalable software solution. I keep saying the same thing over time because people talk about the consultancy and it's silly, but this means that they are locking in customers for further customer expansion. If you have a higher net dollar retention over 100%. That means you're getting more money from existing customers while getting new customers as you're building this up. So what they're spending today most likely should hopefully outpace inflation. So they're going to get more money from these customers as long as Palantir continues to deliver and have their software work for these customers. Cash from operations, $460 million, aka Palantir can run their business as a fast growing company as they're showing without needing to cut into their cash flow, meaning they can accumulate cash while still growing. That's honestly the holy grail. Obviously, the more, the faster, the bigger, but that's the formula you want. You want to be able to make money profitably on a GAAP income basis, and then you also want to do this while building up your cash reserves. For flexibility, not necessarily to sit on it, but we'll talk about that later if interest rates go much lower and the opportunity cost becomes higher. But GAAP net income, $79 million, representing a 10 margin. So $165 million. So this was the hit that people were talking about. So $79 million, if you know that, that's much less than last quarter, which was 100. So you could just flip around here. It's pretty easy. Yeah, $144 million last quarter. However, that hit 165 million plus the 79 was what they probably would have had. But obviously when you're excluding, it's $165 million of net income. So that's what it should have been, which is an expansion. But since they're excluding the one-time SAR-related expenses, that's what happened if you took that into account. But this is a growth company, so a lot of people are thinking, right, if you're growing revenue that much faster and bigger, that's already outpacing the SAR-related expense. So yeah, I'm pretty sure that's not a big deal for the folks here who are happy to buy. I mean, there's people obviously selling, right? It's a two-sided transaction, but happy to buy at $95 per share. It's because expectations of growing into their valuation has just increased. And it's funny too, because we covered the recent $90 price target for Bank of America. So if they're trying to just leapfrog the price, maybe they'll just raise it again in a few days. That'll be interesting. But that's kind of been the trend. But I mean, putting up numbers like these, the narrative is not the same. Actually, the narrative is better. They're showing that they're actually expanding their growth. Now, GAAP income from operations, $11 million. The reason here also is from the SARs. So are they making money as a business? They are. Not as much, obviously, if you're paying people out with the compensation package like this. Adjusted income, $373 million. Rule of 40, 81%. So for those, it's more recent metric. They didn't really... Oh, here we go. So they didn't really share this in the earlier days if you've been watching Palantir. But as of more recent quarters, they've been sharing this because of the obvious trend here. 68% was already fantastic for this metric. If you want to know what Rule of 40 is, essentially it's a way to benchmark other SaaS companies in are they growing, but also doing it in a way that's sustainable. So it takes a combination and just addition of the two rates, year-over-year revenue growth rate, and for them to use adjusted operating margin. And the combination of these two has just been greatly expanding, showing why Palantir is doing so well when it comes to bringing in money, but also staying profitable. Obviously, the SARs, everyone's always going to bring that up. So that is a real thing there, but it's just something to make note of. Hence why their EPS is only 3 cents, but it should have been 7 if they didn't have SARs. And then their cash equivalents are now sitting at $5.2 billion. So, yeah, there's no bankruptcy risk. I mean, I don't think that was ever a risk if you've seen their other metrics like this. What I like about $5.2 billion, I mean, people say, oh, they're getting interest. It's amazing for their income. And honestly, it's probably what's keeping them afloat without the SARs. It is a real factor. Don't get me wrong. But honestly, the big cash pile here is more about the flexibility and what they can do and invest in. And if they're already putting up numbers like this while expanding this cash pile, it just means also that for management to deploy this, they have to really think hard about what's truly driven by spending money to improve performance versus, just feeling your way through and thinking, oh, I spend more money in sales, therefore I'll get more sales. I mean, you might, but is it worth the money that you're putting into it? It seems that with their expanding cash pile here to $5.2 billion, is that really worth even dipping into, right? Keep sitting in the treasuries, right? Times can change. Black swan events do happen. But for a company to be prudent like this and to accumulate their cash during an interest rate environment like this, I'm happy with that. Full year 2024 highlights now. So U.S. grew 38% year over year to $1.9 billion. U.S. commercial revenue grew 54%. U.S. government revenue grew 30%. Revenue grew 29%. Cash from operations, $1.15 billion. So this is for the full year. Adjusted free cash flow, $1.25. GAAP net income, $462 million. Most of that driven by the first 3 quarters. Same with GAAP income from operations. And then adjusted income from operations, $1 billion here. So Palantir is a machine, essentially. We've seen them set up their way of making money. I mean, obviously they went public. It gave them a cash infusion there, essentially scaling them up to this point, to where they are today. And that's the purpose of it, right? Capital is supposed to be invested in a way that, you're removing debts, right? And interest payments. So they basically have 0 debts or negligible debts when we go to the balance sheet, but also being able to scale your operations efficiently per dollar. That's kind of what they've been showing, or that's what they've been showing. It's been proven here. And this is for full year 2024, meaning if we get a full year of these fantastic growth rates and results for 2025, I honestly don't know how big this can get. But obviously Palantir's management has an estimate here, but I always take it with a grain of salt because I know the sandbagging, and this was the biggest sandbag, I'd say, coming from Q3 2024. They were going to say that they were going to get less than 30% growth. Let's see. So 858 billion. So actually we can just do the math here. 858 billion to 862. Oh, sorry, a million. Yeah, that'd be crazy. If I just go to Q1 of 2023, or sorry, Q1 of 2024, we're in the new year. Let's do this. Earnings release. Okay, $634 million was Q1 2024. We can just take out a calculator here for everyone to see. Super high technology, of course. And let me know if I'm missing the call at all. I know it's supposed to start at 4 p.m. Mountain Time. 5 p.m. Mountain. 3 p.m. Mountain, 4 p.m. Central Time, 5 p.m. Eastern Time. So it's usually going to pop up on YouTube. So I'll just get that open here just in case. Don't worry, I didn't forget. We're going to calculate the growth rate for Q1 2025 based off management. Let's do. Oh, we just go to their website, to their channel. What was I doing? Why am I not finding the? There we go. Oh, you want me to ask? Yeah. Yeah, actually, I don't use it. Let's go to the live here. I mean, I'm subscribing to everything, so I'll get all that information when the live pops up. Okay, sorry. So for my train of thought here, 862, 634, 862. Yep. Okay, this is huge. 36%. So in line with this quarter. So I'm not saying that they're just picking what they grew this rate and then they're just applying it to the next one, but it's just funny that it's a 36% year-over-year growth rate for Q1 2025 if they hit the top end. And if we know about sandbagging, which they've done for all the several quarters beforehand, then I would expect higher than 36% at this point. I mean, you set us up for this, right? If you're going to keep exceeding your guidance, I'm going to assume that you're going to exceed your guidance next time. So we got 15% here on the stock, $97 per share essentially after hours. So am I going to expect something to change when management's talking about it, especially when they have outstanding results like this? I don't think so. And yeah, everyone was talking about the tariffs today. Yes, I get it, right? Prices tend to go up for the end consumers when tariffs are implemented, trade relations, all those relationships between countries. But for someone like Palantir, right, your biggest market is your U.S. domestic market. You're a software business. You're not dealing necessarily with the physical goods. You could probably make the argument it actually helps Palantir if their end user customers, especially in logistics, are really trying to find their most efficient usage of dollars. So that other wrench thrown in here means, right, you want to save money. So you might have to spend a bit with Palantir, but if that argument is there for the value, especially if you go to a boot camp seeing, oh, I spend, let's just say $1 million, but I save $5 million. I mean, you'll spend the $1 million to keep that $4 million. So it's all there. And the bigger part for Palantir is that as a software solution, you're there to scale with your needs. If you need to have more things done as your business grows over time, Palantir should be able to deliver. At least that's what they've been showing. What I'm going to be curious about actually is their net dollar retention. Let me just see if they shared it here. No. Okay. Well, we'll see in the presentation if it's on there. Typically, they like to hide it. It's been very, very small, but this is Q3's presentation. But it's like a little line here on the additional metrics and notes. So, I mean, it makes sense. It's not on the main PR here. Now, the CEO letter. Let me just see if that's already out. Letters. February 3, 2025. All right. Now time for the letter from Alex Karp, CEO. I'm sure he's very happy to report these results. And as management, they knew these ahead of time. So he was able to prepare what he wants to focus on. All right. We are still in the earliest stages. That's awesome already, considering what we're already seeing. The beginning of the first act of a revolution that will play out over years and decades. Our total revenue in fourth quarter last year reached a record $828 million. All right, you got to say it right. That's the second sentence here. Total revenue, $828 million, representing a growth rate of 14% from the prior quarters. So the gap here, which is a lot within just 3 months of work, and then 36% from the same period the year before, if you want to take into account, the seasons. This is not an incremental advance or marginal acceleration of our business. This is a new phase. And the momentum we're seeing across sectors, both commercial and government, is unlike anything that's come before. Both commercial and government. I mean, 45% on US government. That's excellent. The graph here already shows it. So he's not showing the growth rates like last quarters. Now he thinks, just showing the sheer number, $828 million in a single quarter, is something to be excited about. And it's the first graph. It's the second sentence of his CEO letter. And it's the first letter of 2025. So what a way to start. The business we have built has now developed its own internal momentum and strength, its own interior life in forms of untamed organic growth, with the output that we are seeing far surpassing what we are investing. A software juggernaut has indeed emerged. Okay, this is a great sentence here. With the output that we are seeing far surpassing what we are investing. We've talked about this with the cash flow continue to grow. They are getting growth while not needing to spend as much, or, they're just that effective with the current resources that they have. So additional spending doesn't, they're far surpassing the output here. We have the products and reach of an established incumbent and the speed, growth, and agility of an insurgent startup. Best of both worlds. It is the most lethal combinations that we've seen seeking to build, and the future is now coming into sharp focus. The strength of our commercial business in the United States, in particular, continues to astound even our most ardent believers. Our U.S. revenue grew 52% year over year to $558 million in the last 3 months of 2024, and our U.S. business at $1.9 billion for the year now accounts for 66% of our total sales. In the United States, commercial revenue alone in the fourth quarter grew 64% year over year and 20% quarter over quarter to $214 million. Now, this one doesn't look as dramatic as the total, but this is amazing to see. You're almost doubling your revenue here. So 131 to 214. Okay, not doubling, but like 60 something percent, or like 50-ish%, more than 50% growth, right? As we saw here, whatever the number is. Sales to our U.S. government partners from intelligence services to healthcare work grew 45% year over year to $343 million in the fourth quarter, pushing annual sales to $1.2 billion. I do like how he pointed out healthcare. I was literally focusing on that video from Cleveland Clinic, but like I said, this is probably one of the biggest sectors of opportunity for them, considering their kind of solution and then the kinds of problems that are just pervasive if you've worked in healthcare. Not even on the technology side. If you're on the front lines or if you're a patient who's gone into a hospital, you want to get these things fixed. Okay. We have been preparing for this moment diligently for more than 20 years. A certain indifference to the doubts and opinions of others to the shiny and fashionable thing was absolutely required. But our patience and what some would fairly describe as our disregard for the received wisdom has been rewarded, basically going against the grain. So our results, the adamantly vulgar metric by which a market often unsure of what it wants to reward, attempts to assess value in this world, have now surpassed even our most ambitious expectations, meaning yeah, a lot of growth is priced into their stock, and let's just take a quick look here. But 18% now, 99, we're going for 100. This is just wild. We still remember the quizzical looks of potential early investors when we attempted to explain what we were building enterprise software at a time when the floodgates of Silicon Valley had opened to fund consumer trinkets, online shopping websites, and other quite forgettable experiments in sating the needs of the late capitalist mind. The looks were only more puzzled, the brows more furrowed, when we made clear that we were intent on building software systems for U.S. defense and intelligence agencies. There were some challenging years. We were an odd bird flying in the wrong direction at the height of the consumer internet bubble. Yeah, this is back in the 2000s. The embrace came only slowly at first and then more recently quite quickly, which we can see. The unfortunate thing, either in business or politics, is that many of one's adversaries and antagonists will never respond to anything but strength, that crude form of power that does not ask for, but which requires compliance and deference. And so strength we have built. Yeah, it's like a poem. And still, the enemy of progress when attempting to advance the interest of either an institution or a nation is a descent into complacency and an abandonment of all humility. That sense of arrival, a certainty that history has ended, or condescension to an adversary or competitor bested, often only temporarily, can be fatal. And it is the technical complacency of a society that often mirrors its political choices and instincts. Our commitment to tolerance and openness, our values as a culture, is without question infectious and compelling, but we cannot yet hope that they alone will protect us and win the day. A fuller statement of this argument and its implications for the current moment and the crossroads at which we have arrived is presented in the Technologic Republic, which will be released shortly. So you got to plug the book, right? But I guess for good reason here. It's not like he was stuffing down our throats. And as Samuel Huntington has written, the rise of the West was not made possible by the superiority of its ideas or values or religion, but rather its superiority in applying organized violence. He continued, Westerners often forget this fact, non-Westerners never do. Essentially showing his support for the U.S. military, the missions, and, everything that can support our allies as well in the globe. And, that's just a real world look at how things are. We know there's the economic might of the United States, but also how is that enforced, right? You can be the richest country, but sometimes having a big stick, not necessarily hitting them with the big stick, but showcasing the big stick, if you listen and read history, is enough, right? For your geopolitics and at least to be a bit more convincing, right? Sometimes the numbers don't necessarily add up for just pure economics. However, when there's other factors of U.S. military might, support, defense, weapons and arms that can be supplied, even just training, right? Things like that, being able to share your knowledge of having a strong military. Palantir is fully behind supporting the United States. So I just thought it was funny. He got to put the plug for the book here, and that's on theme because it's coming out soon. Yeah, speak softly, but carry a big stick. Yeah, I mean the stick speaks very loudly. And it's not that we've never used it either. So there's also that portion. So the CEO letter. We went through it all, and it's pretty much the same thing that I figured he would talk about when you look at the results here for earnings. Now, the call, maybe we get some more tidbits here. I'm thinking they'll stay on theme. Should be 4 o'clock Central Time. So I know a few folks might not, you don't need to stick around. I get it because we've gone through the results per se. During the call as well, typically, let me just go back here. 2024. Typically, that's when they release the presentation. Oh, no, just kidding. All right, we got to go through this now. So we probably won't finish the presentation till even after 4 o'clock, but they will go through some big metrics there as well. But maybe we will. So let's see. And for those who are just joining in, thank you. I know there's like almost 2,000 of you guys here. This is crazy. I know I only live stream the quarterly updates. Everyday work and all that stuff doesn't, allow me to do so like the daily streams, but those are awesome as well. So no matter who you're watching, I know there's a lot of folks excited about Palantir. So we're still waiting for that 4 o'clock Central Time call here. I should get a notification on YouTube once it's up there. But now we're going to go through the investor relations presentation. If you haven't already, we've already gone through the basic report here, or sorry, the PR sent out on Business Wire. So that's going to already have the intro, the highlights, as well as like the guidance and information there with some of the basic financial results here. So you can go through these as well. And then we also went through the CEO letter, which is highlighting, honestly, the main theme. Revenue growth is there, but they are expecting more growth to come. And then also more of the philosophical stuff too, the mission, Palantir standing behind the U.S. military, and of course, the Technologic Republic, which is the Alex Karp's book, Technological Republic, which will be released. But essentially, Palantir is a mission-based company. And yes, they make money, but they're also serving the reason why they were founded and created. So yeah, very great stuff. Honestly, this is going to be a feel-good quarter. I honestly already feel it. And just to peep at the stock, I know this is what a lot of folks like to see. We are into the $100 range. I believe, yeah, we hit a high of $98.88. So, oh, sorry, not $98.88. Into the $99 range here. Let me just see here. Yeah, high of $99.58. So, honestly, I wouldn't be surprised past 100. Now, I know everyone's going to talk about valuation. And there's a lot of expectations built in, but Palantir growing 36% is showing that they are continuing to grow faster based off the baseline that they have. And this presentation is probably going to highlight that too. So we've already gone through these. Feel free to review these. These were all on the PR. Now, I like this portion actually, where they talk about kind of things top of mind. And I thought they weren't going to bring it up specifically, especially if it made things quote unquote look bad. Yeah, if they made things quote unquote look bad, but honestly they didn't. And I think a lot of investors, long-term minded, understand there was going to be a hit here, but at what cost or at what reward in this case, right? We got growth rates that were much higher. Yes, our GAAP net income is much lower, operating income is much lower, but we can see they provided the information on what happened and what the difference would have been if we didn't have that adjustment. So in Q4, we celebrated the successful delivery of our market vesting SARs. As a result of this achievement, $131 million of a one-time expense related to these equity awards was accelerated. Remember, if it's market-based, it was just based on the market conditions of hitting $50 up to $70. So $20 differential here that they can maximize on. For that package. I believe there's other ones at higher price points. And then Palantir's inaugural Warp Speed cohort will power manufacturing and production capabilities through advanced AI and technology. So we've seen a lot of these names here. Panasonic, we know people like to talk about Tesla and providing batteries. L3Harris, that military partner and contractor that they've partnered up with and won contracts alongside. Anduril as well, big one. Everyone brings this up during the Titan project. And then Shield AI for the drones. Now, recently, I believe there's also news about a funding round for them. I think $200 million, and Palantir possibly participating. We'll see. But essentially, Warp Speed is the platform to help the U.S. bring back their industrial base, especially on the military side of things, to make sure things are going as they're supposed to. Now, Warp Speed helps us ensure manufacturing capabilities for our customers quickly. By using the software, we've seen up to 200x efficiency gain in our ability to anticipate and respond to supply shortages. Come on, 200 times efficiency. That's a bold thing to say, honestly, too, because it's just funny because like it also makes you look like you were 200 times less efficient beforehand, and maybe it's because of incompetency, but I think these are such great results that, you know, it's about the technology and how it's pushing you forward. So I like how they get past and it's Anduril too, so I know they would just at least based on kind of the reputation, like they're not going to be afraid to talk about making improvements. There's a political game of, if I improve too much, it means I wasn't competent before, but in the end, people care about results. And if you're going to be 200 times better, now it's about the challenge of how do you get better 200 times more, or at least off that 200 times higher baseline. All right, Palantir extended its longstanding Army Vantage partnership up to 4 years. I think we saw this for 600 something million. I'd have to double check on the numbers here. Do they have the link? Oh no, it's just the printed learn more. Oh, Palantir Pre. Yes, there was actually a video that came out throughout the quarter. I don't think I made something specifically on it, but we got some nice quotes here, and you got to like it when there's numbers. But let's start here. With the Palantir Ontology, our food safety quality regulatory team can do a very quick, rapid, and highly focused investigation within our supply chain and with our customers. We're much faster, better, and safer with our Palantir partnership. That hits everything. Faster and better, but also safer when it comes to your supply chain. And in the end, like, you're very motivated to keep your customers happy. So this is for a VP of food safety. So, you know, a lot of people talk about what are we putting into our bodies. So it's always on brand to hear someone able to say that our food supply is much better off with Palantir. Next one, we have been on our Palantir journey for a year and have 14 use cases in play and 42 queued up. That's awesome. You're basically gonna 3x what you're gonna do after. Like, oh, we've done this here, we got to do it 3 times more. And then I'm assuming they use these use cases concurrently, so they just keep building them up. What's after the 42, right? Over 100 next. So we have 1,011 applications, and if I can connect all those systems into Palantir, I can just point a problem at it and get the data in a meaningful way. So it sounds like the agility of them being able to take on these new use cases is also what's being portrayed here, right? If you like something a lot, you're going to do more of it. And it sounds like they're able to do it with Palantir. They could just point a problem at it and then get the data in a meaningful way. They're not getting stuck behind, oh, we got a new data set, we got to trust it again, we got to make sure it's clean, all those things. And that's a real slowdown for businesses across all industries. I've run into it many times in my career, or I still run into my career. So Clarios, we partnered with Palantir and we took a process that would take 4 hours to a day for numerous people, and now one person can do it within minutes. Oh, that's the beauty of it, right? Now everyone's going to talk about, oh, what's going to happen to the jobs there, but essentially it's like these are tasks that, you know, quality wise, do you like, yes, maybe you really need that person there, which is good, but you know, when it comes to automation, there's a reason why we like it for quality purposes, for the consistency. And yes, it may break down when handed a wrench, but we know it's going to run in the way that we're asking it to. And this also frees up experts. You know, you're thinking that these are experts running the process and possibly finding more points of inefficiencies or even creating things that can add on to the company. So it's being able to allocate resources to their best possible usage. If you're a person working and running a thing, I get it, right? The whole salary, and you just maximize your payment for keeping it easy on yourself. But when the company evaluates you and your performance and the value you're delivering, these add up and can lead to automation, but also you providing value in a better way. Now, DevCon 1, so this is where you got developers coming together, and some people were able to turn in projects here and then become invited. But yeah, we're at 97, 98. Okay, but either way, hitting that 99.58 is huge. Sorry, I just had to take a look at the price. DevCon 1. But they got 2 days getting all these developers together, 14 plus product launches, 150 builders, and one developer revolution. At DEF CON 1, we brought together 150 of the most ambitious builders for 2 days of exclusive workshops, showcases, and competition. Yes, I get it. You don't necessarily get all the metrics out of here, and it's not necessarily easy to quantify what this means. But this is super important to Palantir because, yeah, you can get closer to the consumer side if someone just goes off and builds their own thing off of Palantir. It also means for the workforce, you have more people who are getting more, ambitious with how they're using the software themselves. And if they're doing it independently, then obviously they can be as ambitious as they want. But this develops a workforce where, say, oh, I was building stuff on Palantir. Oh, I can maybe apply for a job at someone who's trying to implement Palantir at their company. And then this spreads because you're working at a company, they're using Palantir. Other coworkers learn from you. How does it work? Maybe you're that good at it. Maybe you consult on how you can best utilize it. And then more companies can use it as people spread throughout and as other companies learn from each other. So there's a lot of things here. It might seem slow. And, these are part of it where you just got to teach someone. Sometimes it's one at a time or 150 at a time and send them out into the world. So this is very important, I think, for the long-term scalability of Palantir, because to be sticky, you need people to be able to use your software. And I get it. Companies sign up and they have enterprises, and those employees get trained over time. But you can accelerate that by, working on both sides of the equation. People inside the companies, people outside the companies, and then the other side of the equation, people starting their own companies, trying to use the most efficient way of their to scale, and maybe start off after the things they've heard on Palantir on the right kind of infrastructure, where they don't have to go through digital transformation programs at like these big companies, because you already started at a good starting point with Palantir. Oh, here we go. Cleveland Clinic uses AIP to streamline operations and bring world-class care to more patients. I went through the video here. They highlighted the points exactly. So I didn't know that they were going to do this, of course, but it makes sense with how close the announcement was. And it's from Cleveland Clinic themselves. I'm sure someone talked to someone and, approved the numbers that they're sharing out to the world. But like I say, healthcare honestly is one of the biggest opportunities that I can see for Palantir. And it's going to be huge, not necessarily even on the financial end, but also time-wise. If you've ever waited in an ER waiting room, but also burnout for if you know anyone who works in healthcare, is on the ground floor dealing with the issues and maybe having to do administrative stuff alongside the clinical things that they do. I'm sure most of those people join healthcare to do healthcare, right? Not necessarily to fill out paperwork and sit on a computer. Obviously, there's other facets of the of the hospital, but the ones on the floor who really take patient care to heart and have that drive and personality for it, like they want to be able to do things that are interesting to them and where they can make a difference. And then same here, transforming the speed and scale of the U.S. government. So Q4, they received FedRAMP high authorization for their federal cloud service and supporting services, enabling software companies to accelerate market access to the federal space through radical reduction of both time and cost. Yeah, Palantir is the platform. So essentially, they got the authorization. They've gone through the hard work. They've proven that they can work in a secure environment, and then people piggyback off that, right? We just hear about customers that scale up so much quickly, get their authorization because they worked alongside Palantir, and then they're able to now fulfill the obligations of the contract that they signed with the U.S. government. So this is just huge news throughout the quarter. And then Rio Tinto, very big. Australia, renewed enterprise contract. Rio Tinto operations will use Foundry AIP to orchestrate optimized train routes, maintenance needs for dozens of unmanned trains running 24/7. You got to move the stuff back and forth. All right, the financials here. So we're at 349. The call is not out yet. Let me just double check. Nothing crazy happened while I was gone here. Looking at the presentation. Yep, so we got it scheduled Q4 2024. It should notify me, but let's see. If I let it play in the background here, it should start to play some audio. Cool. Oh, sorry. It looks like they don't have it started, so there's no music or anything, but it sounds like they'll probably play some like opener or something to let us know. But we got the timer here, 10 minutes. So on the dot is when the live stream is supposed to start. 4 p.m. Central Time, 5 Eastern for those other folks. All right. Now we got the GAAP net income. So they are adding now the clarifications. Everyone knows, like, oh my God, we dropped down to 79. But if you just follow the company, you understand what this is and why. And obviously pushing for growth was the main priority here, even at the cost of some of the GAAP net income. And you can make the argument Palantir built up the buffer of their GAAP net income, even with their cash pile too, because interest income is a factor here, allowing them to keep their positive GAAP net income while also being able to do this here. But their cash does continue to grow. So it's kind of like pulling different levers. Where are you willing to have some flexibility, and they utilize it here. And if you think about it longer term, right, it does create more, better morale for the employees and possibly that much more motivating. Obviously, quantifying that exactly per person is something else. Same for GAAP operating income. How are they making money as a business without all those other factors of like interest income and other income? Now, rule of 40, I didn't think they could get even better, but 81% makes sense, right? The revenue growth rate is really driving this, and they still have expanding adjusted margins. So this is even higher. I mean, this is a blowout quarter, honestly. So if someone is saying it's not, then I'm not sure what they're looking at. Everything is just hitting where it needs to hit. So yeah, 18% here. We're back up to almost $100 a share. This said $99.50. Oh, okay. Either way, it's still the day-to-day. Long term, we just care about at least for me personally, it's more about the longer term. U.S. revenue growth, 52%. So this is combination of U.S. commercial and U.S. government, focusing not on the international side of things. So $558 million of this was on the U.S. side. I mean, simple subtraction, you'll find out the international side, and then you just take the difference of that for the other international and find the growth rate. And it's obviously going to be lower because this is 52%, but the overall growth rate is at 36%. Now, U.S. commercial revenue, 64%. We do expect this to continue to outperform, and it's technically a lower baseline than U.S. government revenue growth. So we do want to keep seeing these higher percentages when you compare the two. Now, I'm not saying that I'm not going to take a higher percentage here, right? But if the commercial thesis is one, we just don't want to see this drop down necessarily below government revenue. It should be easier technically or financially based off the numbers, 214 to get a higher growth rate. All right, commercial revenue growth. So this is combination of U.S. and commercial, but now separated by that segment. So as you can see, commercial revenue growth actually is 31% versus 40%. So actually, if you think about it like this, if you compare the two, so why is U.S. commercial revenue so much higher, but then commercial is dragged down? So international commercial is not the highlight, essentially, the drag down. And we already knew Palantir is heavily already U.S. government based. So for their government business, it makes sense that the majority of the growth is already there. But still, so that means the baseline for international is smaller. So we have U.S. only as 237, but then we have 100 and less than 100 million here being added on from the international side of things. So U.S. government is just growing so much faster, and then this is dragged down by international commercial. So that's where we're at, the 36% total revenue growth. I mean, throughout the quarter, I'll probably be making videos, and then we'll talk about $828 million in a single quarter. How fast does this scale to $1 billion per quarter? That'll be a monumental moment. I mean, everything, it just seems like there's always a monumental moment if you're talking about Palantir at this point, each quarter. Total revenue. So this is excluding strategic commercial contracts, still 39%. So of course it's going to be higher because you're excluding out the lower performing ones here from the past. Now, this is always nice to see. Adjusted operating income is way higher, and seeing this trend just skyrocket, I mean, come on. This is something that you want to see, especially when it comes to how they're running their business. So it's nice because some places can try to always go for only top line revenue growth. And I get it, right? Because that's honestly the big number, and Palantir is doing that. But how much of it are you keeping, right? And yes, this is on an adjusted basis too, so there's the argument for stock-based compensation, but being able to, so you could even make the argument this might have been another factor in why Palantir's stock is performing so incredibly today after the results. They're making more money and more than we thought and bringing it in, but they're keeping it. That's huge. And yes, someone's going to bring up the SARS, right? Yeah, that's the one-time expense that they've talked about. Now, this is the other surprising factor, and finally, we've gotten to see something magnificent. This is honestly, I was like feeling like a broken record each time when I was seeing this. Like, oh, they're still growing commercial and even just total customer count very healthily, but these are just nominal counts, right? One customer can be $1 million versus one customer doing $10 million. We want to see them setting up a bigger baseline, and we wanted to see a larger consecutive quarter-over-quarter growth like this. So I'm just glad to see this is probably what I'm saying is most surprising. I was expecting them to do better than their guidance for revenue, but I wanted to see them buck this trend here of declining quarter-over-quarter customer counts. And you'll see this trend also here for the total customer count, 11, 7, 6%, now 13%. Now, also for commercial customer count, so this is both US and international, but it's still bucking the trend, all of these here, plus 13%, plus 15%, a total of 711. So they've beaten a new 100 customer mark here. And there should be a definition of customer as well somewhere, but essentially these are real customers where they're getting money from them and paid. Oh, okay. So number of deals closed. So this is just a really nice anecdotal piece. I was already talking about this previously when we first got the information, but just to show, where is it? Oh, here we go. Okay, here. All of these metrics, they surpass from last quarter. So, yeah, even if it's anecdotal, 129 $1 million deals closed versus 104, 58 versus 36, and then 32. This is $10 million deal signs. These are $10 million. So these are large companies that, you know, there's usually a very long process and, you know, oh, is it going to be worth it? Prove your value. Why should we sign with you? All these things. And this takes many employees to do. But if you're someone like Palantir who can demonstrate it, maybe with a boot camp, or you've got, you know, your lead, a very warm lead because they got their hands on the software, it seems like the effectiveness in closing deals is just technically doubled 16 to 32 for at least $10 million deals of the 129. So always great to see this. And it's just nice when the comparison is just a beat across the board, right? And I keep flipping here, but it's nice. Not like we overperform on smaller deals or we only performed well on big deals. They did it on every single one, which is very nice. Okay, Palantir is live. Let me just make sure. Okay. Maybe I'll give it a minute or two, but it should pop up. Okay, it is running right now. Just let me know if the sound, when they start talking, if it's not working. Got to give it a like, of course, right here. I think comments are off. Yeah, comments are always off. 1,200 watching. This is exciting. Q4. I mean, we can scroll really fast. $5.2 billion. We've talked about this. And the guidance over here. This is guiding for $862 million is 36% growth rate. So they basically took the growth rate they got for this quarter, and then with the new baseline for Q1 2024 versus Q1 2025, this is a 36% increase. If they hit this, we know they've been sandbagging each and every time, and you know, it's just exciting stuff here. I know a lot of folks are excited considering, you know, I guess you could just look at the stock and people are like, okay, something good happened. We're at $100 here, almost 20% up. Palantir has a lot of expectations built in, but they are delivering on it. So yeah, basically, if you have a DCF model, it's broken, but you obviously can manipulate the numbers for a certain growth rate and a discount rate. But I mean, if Palantir is delivering and the qualitative side of saying, okay, their growth rate now was from the low 20s, the mid 20s, to 30%. now mid-30s, and now they're guiding for mid-30s, and they typically exceed that, I think the conversation is just going to turn into 40% at this time. Okay, now we're back below 100. Maybe that psychological point here,
Good afternoon. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our fourth quarter 2024 earnings call.
And
we'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our first quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release, distributed after the market closed today, and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
2024 was nothing short of incredible for Palantir. Our momentum accelerated through year-end, closing out 2024 with exceptional Q4 results, including an extraordinary top-line beat and outperformance led by our U.S. business. Revenue grew 14% sequentially and 36% year-over-year in Q4, and 29% year-over-year for the full year. The AI revolution continues, transforming industries and redefining how organizations operate. AI is a pivotal component in driving innovation and efficiency, something companies need to embrace or fall behind. With the proliferation of AI models, the raw AI labor supply is exploding. While everyone else is focused on the model supply side, we're transforming AI into a measurable stream of high-value finished goods and services. The result? The rapid emergence of quantified exceptionalism for organizations able to unlock the potential of these commoditized models through AIP. A byproduct of our incredible progress, our Rule of 40 score increased to 81 in the fourth quarter. It's a substantial leap to deploy LLMs into production with real impact. Most organizations are currently stuck on the wrong side of the widening chasm, working on their 2, 5, and 10-year plans, which become obsolete days later, failing to ever take action, but not Palantir or our quickly growing customer base. We've taken our position through our decades-long investment in developing the ontology, which allows organizations to seamlessly weave LLMs into their enterprise, unlocking their highest potential leverage. In this AI revolution, anyone looking for a solution that actually works is going to choose Palantir. Last quarter alone, we closed $1.8 billion of TCV across our business, which represents a 56% increase year over year. We closed a record-setting number of deals in Q4, including 32 deals worth $10 million or more. Our U.S. business is at the forefront of the AI revolution, growing 52% year over year in Q4. Last quarter, U.S. commercial revenue grew 64% year over year and 20% sequentially. AIP continues to fuel new customer acquisition, as we have nearly 5 times the number of U.S. commercial customers as we did 3 years ago, and significant expansion opportunities at existing customers. Organizations who have crossed the chasm with Palantir are driving real impact quickly. In this AI revolution, the biggest risk is not moving fast enough, and organizations are looking to us. With Palantir, as soon as work begins, we're delivering real, quantified exceptionalism for our customers. In my conversations, they're excitedly asking how we can replicate this success across their organizations. One of America's largest pharmacies has been a customer since early 2024 and signed a $67 million TCV engagement with us right after the pilot for workflows including automatically load balancing prescription fulfillment and orchestrating patient outreach. An American telecom company became a customer approximately 2 years ago and recently signed a $40 million TCV expansion deal to help manage and accelerate their decommissioning of old network technologies and equipment in order to achieve significant cost savings. Last earnings call, we mentioned the leading global insurance organization that deployed AIP to help automate underwriting workflows, reducing a 2-week process to 3 hours. That organization signed a nearly $11 million ACV expansion deal in Q4. Panasonic Energy North America is seeing the effects of its AIP expansion as they've created a maintenance assistant to help 350 technicians in making 5.5 million batteries per day, resulting in reduced machine downtime, greater throughput, and rapid onboarding of new technicians. In Q4, we also announced the customers in the inaugural Warp Speed cohort, which are using Palantir's Warp Speed to gain an advantage in aspects of their manufacturing operating system, including automated visual quality inspections and dynamic production scheduling. Anduril CIO Tom Bosco noted, quote, "By using the software, we've seen up to 200x efficiency gain in our ability to anticipate and respond to supply shortages." Our U.S. government business, the foundation on which Palantir was built, is exceedingly strong, with revenue growing 45% year over year last quarter. We take pride in supporting the critical missions we're delivering against. Notable deals included the U.S. Army extending its longstanding partnership with Palantir to deliver the Army Vantage capability in support of the Army Data Platform for up to 4 years. We also announced our recent contract expansion with U.S. Special Operations Command, marking the first deployment of Mission Manager to U.S. Special Operations Forces units. Our international commercial business continues to see pockets of growth alongside the large renewals of some of our long-standing customers. For example, Rio Tinto extended their partnership with Palantir for an additional 4 years, noting AIP is making their unstructured data accessible, allowing them to quickly attack problems previously deemed too complex. Using our software, network rail specialists coordinate 53 driverless trains, each with 240 wagons, ultimately improving throughput and safety. Our international government business also achieved strong growth. Revenue increased 26% sequentially last quarter, driven in large part by the UK, including our work with the NHS to roll out the Federated Data Platform as 87 acute NHS trusts and 28 integrated care boards have signed up to use it as of November 2024. We accelerated through the end of the year and we remain full throttle. We're at the dawn of this AI revolution, and in this winner-take-all AI economy, Palantir leads the way. I'll now turn it over to Shyam.
Thanks, Ryan. For the last 2 years, we've been saying that even while the LLMs are improving, the models across both open and closed source are becoming more similar, and performance will converge, all while the cost per token for inference continues to drop substantially. And that's because the market's been focused on AI supply, the models. With the release of DeepSeek R1, that has gone from a contrarian position to consensus. It's now blindingly obvious to everyone. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on AI demand. From the beginning, AIP was built for this reality. Chat was always a dead end. Instead, we viewed LLMs as a new runtime for the AI labor. To capture the productive value of this AI labor, you need an intermediate representation of your enterprise that AI can actually interact with. How do you allocate inventory, onboard customers, process claims, call for prior authorization, and the like? That intermediary representation that makes all of that possible is ontology, and that's why it's been the secret to our meteoric rise. We are convinced the normative value for AI is enterprise autonomy, the self-driving company. Users go from performing the workflow to supervising an army of agents, teaching them how to handle edge cases and reducing dwell time. This is where we are maniacally focused with our customers. We've been working with a large multinational bank to automate core back-office processes. What used to take 5 days now takes 3 minutes. Much more than the labor savings, this improvement eliminates historical constraints on the middle office and now enables the bank to create entirely new and differentiated financial products. We're working with a top engineering and construction firm to automate the identification of risks across tens of thousands of pages of technical documents, replacing months of arduous manual reviews with AI labor that can flag major risks to engineers in minutes. And we're working with a large power systems company to automate the understanding of technical diagrams to turn them into quotes into orders. And finally, we're working with an automotive supplier to analyze CAD files for component designs to have AI labor validate engineering standards and manufacturability checks. That is a 100-hour process for human engineers, now automated and serving up exceptions for human review. The before and after with AI is stark, and the speed of implementation is accelerating. You can divide companies up into two categories, the quick and the dead. Turning to warp speed, Palantir's modern American manufacturing operating system, it continues to move at warp 10. Our nation is in the beginning of a great reindustrialization as we compete with China to secure a free world and individual liberties. This is a competition we cannot afford to lose. We announced our first cohort of warp speed customers, including Anduril and L3 Harris. The response has been exceptional, and the pipeline is swelling. Warp Speed integrates engineering, test, production, quality, and operations so that manufacturers can build better and build faster. Our FedStart offering hit a major milestone with the approval of our FedRAMP High environment for FedStart customers. This is radical acceleration, both in reduction of time and costs of market access for software companies in the federal space. Finally, in U.S. government, our deep investments in CJADC2 continue to deliver results. Maven continues to see significant adoption and is pathfinding new AI capabilities throughout the kill chain. Substantial new investments integrating contested logistics into Maven's AI-enabled kill chain met their moment in exercises in Q4. Adoption continues within the military departments, specifically Army, Air Force, and Space Force, as well as at the combatant commands with expansions at SpaceCom, Southcom, AFRICOM, and STRATCOM. While Hurricane Helene response galvanized the adoption of Maven on unclass beyond just the secret and top secret networks, the adoption has continued to grow as Maven is used for securing our nation's border and securing our nation's airspace by enabling drone domain awareness. And Maven is reaching our allies and partners via U.S.-supplied capabilities called Maven REL, all spurred by real-world events and the need to collaborate in real time in crisis. We are really just getting started with Maven and have an ambitious roadmap and a set of customer opportunities in front of us to deliver the unfair advantage our warfighters deserve. I'll turn it over to Dave to talk us through the numbers.
Thanks, Shyam. We had an outstanding fourth quarter. Revenue growth accelerated to 36% year over year, exceeding the high end of our prior guidance by over 900 basis points and representing a 1,600 basis point increase compared to the growth rate in Q4 of last year. America continues to rapidly embrace the AI revolution, and we saw this unrelenting demand drive impressive outperformance in our U.S. business, which grew 52% year over year and 12% sequentially. Our U.S. commercial business grew 64% year over year and 20% sequentially, and our U.S. government business grew 45% year over year and 7% sequentially. On the back of this continued strength, we are guiding to a full year 2025 revenue midpoint of $3.749 billion, representing a 31% year-over-year growth rate. We delivered these outstanding top-line results while expanding adjusted operating margin to 45%, the strongest adjusted operating margin in the company's history. Our revenue and profitability drove a 13-point sequential increase to a Rule of 40 score from 68 in the third quarter to 81 in the fourth quarter. We also had an exceptional cash flow quarter with adjusted free cash flow of $517 million, representing a margin of 63%, and $1.25 billion in adjusted free cash flow for the full year, representing a margin of 44%. Turning to our global top-line results, fourth quarter revenue grew 36% year over year and 14% sequentially to $828 million. Full year revenue grew 29% year over year to $2.87 billion. Full year U.S. revenue grew 38% year over year to $1.9 billion. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 39% year over year and 14% sequentially, and full year revenue grew 32% year over year. Customer count grew 43% year over year and 13% sequentially to 711 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 18% year over year to $65 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 31% year over year and 17% sequentially to $372 million. Full-year commercial revenue grew 29% year-over-year to $1.3 billion. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 37% year-over-year and 18% sequentially, and full-year commercial revenue grew 36% year-over-year. We had our strongest quarter of commercial TCV booked at $995 million, representing 42% growth year-over-year and 63% growth sequentially. Our U.S. commercial business is seeing unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. Fourth quarter U.S. commercial revenue grew 64% year-over-year and 20% sequentially to $214 million. Full-year U.S. commercial revenue grew 54% year-over-year to $702 million. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 76% year-over-year and 19% sequentially, and full-year U.S. commercial revenue grew 69% year-over-year. We also had our strongest quarter of U.S. commercial TCV booked at $803 million, representing growth of 134% year-over-year and 170% sequentially. This exceeded our next highest quarter of U.S. commercial TCV booked by nearly $400 million, highlighting the increased demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 99% year-over-year and 47% sequentially. Our U.S. commercial customer count grew to 382 customers, reflecting growth of 73% year-over-year and 19% sequentially. Fourth quarter international commercial revenue grew 3% year-over-year and 15% sequentially to $158 million, partially driven by revenue catch-up from a customer in Asia. Full-year international commercial revenue grew 9% year-over-year to $594 million. For international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating our growth in the U.S. commercial business. Revenue from strategic commercial contracts was $9.6 million for the quarter. We anticipate first quarter 2025 revenue from these contracts to decline to between $4 to $6 million compared to $24 million in the first quarter of 2024. We anticipate 2025 revenue from these contracts to be approximately 0.5% of full-year revenue. Shifting to our government segment. Fourth quarter government revenue grew 40% year-over-year and 11% sequentially to $455 million. Full-year government revenue grew 28% year-over-year to $1.57 billion. Fourth quarter U.S. government revenue grew 45% year-over-year and 7% sequentially to $343 million. Full-year U.S. government revenue grew 30% year-over-year to $1.2 billion. This acceleration was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Fourth quarter international government revenue grew 28% year-over-year and 26% sequentially to $112 million, bolstered by our continued work in UK healthcare and defense. Full-year international government revenue grew 23% year-over-year to $372 million. Fourth quarter TCV booked was $1.79 billion, up 56% year-over-year and 63% sequentially. Net dollar retention was 120%, an increase of 200 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q4 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the fourth quarter with $5.43 billion in total remaining deal value, an increase of 40% year-over-year and 20% sequentially, and $1.73 billion in remaining performance obligations, an increase of 39% year-over-year and 10% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter and the full year. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $373 million, representing adjusted operating margin of 45%. Full-year adjusted income from operations was $1.13 billion, representing margin of 39%. Q4 adjusted expense was $455 million, up 1% sequentially and 14% year-over-year, and full-year adjusted expense was $1.74 billion, up 9% year-over-year, primarily driven by our continued investment in AIP and technical talent. We expect to see a more significant increase in expense in 2025 as we invest in technical hires, the product pipeline, and continue our focus on AI production use cases, all while delivering our goals of sustained GAAP profitability. On the back of the strength of our results, we want to congratulate our employees for the successful delivery of their market vesting stock appreciation rights, or SARs. As a result of this achievement, we accelerated $131 million of one-time expense in the fourth quarter related to these equity awards. Fourth quarter stock-based compensation expense was $282 million, and employer-related equity tax expense was $80 million. Full-year stock-based compensation expense was $692 million, and employer-related equity tax expense was $126 million. Fourth quarter GAAP operating income was $11 million, representing a margin of 1%. Fourth quarter operating income, when excluding one-time SAR-related expenses, was $142 million, representing a 17% margin. Full-year GAAP operating income was $310 million, representing an 11% margin. Full-year operating income, when excluding one-time SAR-related expenses, was $442 million, representing a 15% margin. Fourth quarter GAAP net income was $79 million, representing a 10% margin. Fourth quarter net income, when excluding one-time SAR-related expenses, was $165 million, representing a 20% margin. Full-year GAAP net income was $462 million, representing a 16% margin. Fourth quarter GAAP earnings per share was 3 cents, and earnings per share when excluding one-time SAR-related expenses was 7 cents. Full-year GAAP earnings per share was 19 cents. Fourth quarter adjusted earnings per share was 14 cents. Full-year adjusted earnings per share was 41 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 81% in the fourth quarter, a 13-point increase to our Rule of 40 score from the prior quarter. Turning to our cash flow. In the fourth quarter, we generated $460 million in cash from operations and $517 million in adjusted free cash flow, representing margins of 56% and 63% respectively. For the full year, we generated $1.15 billion in cash from operations and $1.25 billion in adjusted free cash flow, representing margins of 40% and 44% respectively. Through the end of the fourth quarter, we repurchased approximately 2.1 million shares as part of our share repurchase program. As of the end of the quarter, we have $936 million remaining of the original authorization. We ended the quarter with $5.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now, turning to our outlook. For Q1 2025, we expect revenue of between $858 and $862 million, and adjusted income from operations of between $354 and $358 million. For full year 2025, we expect revenue of between $3.741 and $3.757 billion, U.S. commercial revenue in excess of $1.079 billion, representing a growth rate of at least 54%, adjusted income from operations of between $1.551 and $1.567 billion, adjusted free cash flow of between $1.5 and $1.7 billion, and GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our Palantir Revolution, otherwise known as our earnings call. There really is a lot of debate about with these numbers if you even should have an earnings call. There was also a lot of debate around which number is the best internally. We were undecided whether our 29% growth in aggregate, our 38% growth in the U.S., our 54% growth in U.S. commercial, our rule of 81. They may have to redo the rule because, you know, when you're doing twice the rule, of course, maybe the rule isn't fair to other companies. We may have to have a different rule, the rule of 70 or something. But we blew through that over twice the rule of 40. To say we did it our way is a minimization of what that meant. We have taken a long bet over decades around the assumption that if we built the products that our partners, most importantly our partners in the West, most importantly our partners in the U.S., ought to build, not what they wanted us to build, not what they mandated we should build, not what investors, venture capitalists or analysts were saying they would reward us for building, that company would generate so much value and that we would get a small percentage of that, and we would end up as a massive, significant, and much more importantly, impactful company that could power the West to its obvious innate superiority, expose things that weren't working, rebuild the whole infrastructure of a company. We did that with many platforms. Most successfully, however, was our interest in figuring out how to power human-driven analytics with the assumption that what ought to come would not be human-driven, i.e. would be AI at some point, and that AI potentially could be something like a large language model. And what we've delivered to the market is a symbiotic relationship between data, computer, LLMs, organized, powered, made possible, made valuable by something we dared to call an ontology, which was in the beginning viewed as a highly obnoxious, anticlimactic term that people thought we were using to obfuscate bad financials. And that ontology and our willingness to stick to our guns, again, because there's been billions and billions and billions of dollars invested in large language models, the idea that you could dare to build a product that was built on the assumption that the power of large language models would be in their the ability to operationalize them in the context of the enterprise in common language. So that was a revolution that we saw, that we built against, that we've led, that we've gotten off the ground for us in America. We have 54% growth in U.S. comm. By the way, USG is now re-accelerated. It grew 30%. We are guiding above 30% at 31%. And we're doing this in a very, very complicated environment. You know, the part of the reason we've done so well is the experts look to the past as an indication of the future when we're looking to the future as an indication of the present. And it's very, very hard to figure out what's going to happen. We see, as much as I personally care about the broader West, including continental Europe, despite our best efforts and working at it every day, it's anemic. We're growing around 4% on 13% of our company. It does look like the continent of Europe will look to the past as a way of getting to the future, struggles with the idea that all the valuable technology in this area is built in America, perhaps struggles with the fact that to make LLMs work, you have to find a way to build something like an ontology. There's one available at Palantir. We have rejected all the way through anti-meritocratic concepts, anti-transparent concepts. We're at the forefront of civil liberties. One of the reasons ontology is so valuable is because the concepts that we built into PG, that we built into Foundry, that are expressed in branching, are concepts that both accelerate revenue, get and decelerate, control CapEx, i.e. make the margins something like what you would find at Palantir, but do it in a way that actually make the enterprise better, healthier, more ethical. We, at the end of the day, at Palantir, are exporting our culture and way of doing things to enterprises, especially in America, by allowing enterprises to capture their tribal knowledge in a way that they can utilize LLMs, i.e. take the commodity side of LLMs and hypercharge their secrets of their enterprise using the secrets of our enterprise, namely, how do you build product? How do you end up with ontology? How do you implement it? And last not least, we believe we are making America more lethal, making our adversaries increasingly afraid of acting against the interests of America and especially Americans. And we're proud of our moral stance, and we are very long on the U.S. and what's happening and what will happen in the future. And with that, we should open up our earnings call. But this is obviously a very, very special time to be at Palantir. Palantirians and are very excited. And I am, it's by far the best time to be at Palantir. One of the things that's crazy important about our time at Palantir now is It's actually the vibe internally, the vibe with our clients, the vibe inside of our products is we are at the way beginning of our trajectory. We are at the way beginning of revolution, and we plan to be a cornerstone, if not the cornerstone company in driving this revolution in the U.S. over the next 3 to 5 years.
Thanks,
Thank
Alex.
you.
We'll now turn to a few questions from our shareholders before opening up the call. Our first question is from Christina, who asks, what is so unique about the ontology? How does it give you an edge over your competitors? And why wouldn't any of them be able to recreate something similar?
Well, thank you, Christina, for the question. I think we could start by thinking about if I was building software to solve problems for one company, well, you don't need an ontology. You just take the shortest path between A and B, and that doesn't involve ontology. You could think about, okay, what if I'm building enterprise software for many customers in a traditional way, not a forward-deployed engineering way, where I'm thinking about it deductively. I have large multi-year implementations. Never mind that those things never work, but the traditional software industrial complex, you're not even going to conceive of ontology. But if you have the ambition to build software that works across government, across 50 different industries, you have to build ontology. It is absolutely the longest path between point A and point B, but it gives you superpowers when you show up to your customers. And it gives your customers superpowers when they're managing the change in their enterprise, mergers and acquisitions, fighting the entropy of the universe, competing in the market. But what makes ontology essential is AI. Ontology ends up being the intermediary representation that makes your enterprise accessible to AI in a way that's governed and secure and provides you the observability that you need so you can actually trust the AI. But more importantly, the observability your regulators need so they can trust in your transition to being a self-driving company.
Yeah, and it also allows you to manage them so that the actual taxonomy and ability to put the large language model where it can be more exact, so it can be managed at scale. You could think of it as what we do on the Foundry backend, where we have it create pipelines. It's basically anti-segmenting the data. To get the AI to actually work in an enterprise, you have to resegment, reconcatenate the large language models in a way where the use case is thin enough that they can actually provide exact enough information, and the concatenation of that is exact enough to provide real results in an enterprise context, meaning you can rely on the large language model to do the same thing 500 people would be doing who are experts in dealing with text, and you can do that with 3 people. And then the question that Shyam is answering is also, but why is it hard to build it? So now we know that Palantir is succeeding and has this, pick your stat, rule of 81, growth with basically a nascent sales force. It's actually very hard to build because in order to have an idea how to do this, you would have to have taken all the lessons of every single product we built, including security models, including how do you interact with the data of an actual enterprise, how do you impose branching, and then you'd have to interact with that and build something to work with the large language models, not as you thought they were, not as you'd liked them to be, but as they are. And that process probably will begin for lots of companies now. It is a very long and hard process to do this in a productized form. And one of the reasons people didn't figure this out is because tech companies don't actually need this because they have one company or they have something, but it is not a product. Taking this from one company to a company that can install this anywhere requires a very specialized, dedicated product building culture with deep understanding the enterprise. Last not least, in order to be able to teach the large language model to get more exact, precise information, you would have to have a secure and cleaned access to the underlying data of the enterprise. No other company in the world has that kind of access like Palantir, and that's why we're completely uniquely positioned to do this. And luckily for the world, we're very long America, and we're doing it primarily here because it's powerful as fuck.
Thank you both. Our next question is from Kamal, who asks, how will the new Chinese AI model DeepSeek impact Palantir, and how can Palantir mitigate its impact?
Well, I think one of the obvious lessons of DeepSeek R1 is something that we've been saying for the last 2 years, which is that the models are commoditizing. Yes, they're getting better across both closed and open, but they're also getting more similar, and the price of inference is dropping like a rock. But I think the real lesson, the more profound one, is that we are at war with China. We are in an AI arms race. And I got into a disagreement with Sam Altman about this at the Senate AI Summit over a year ago, where I was arguing that we are in an AI arms race, and there's an opposing view that we can all get along and we can cooperate on these things. And I'm sure the other side feels quite different, realizing that their IP has been stolen in this process here. But this war started long ago. It was an economic war with the ascension of China to the World Trade Organization, the greatest IP theft in history, the greatest wealth transfer in history. It is an opium war. The number one cause of deaths of 18 to 45-year-olds in this country is fentanyl. That is coming from China. It is a diplomatic war. The Belt and Road Initiative is basically indentured servitude for other countries to the CCP here. And the unprecedented phase zero gray zone operations of the CCP, how many times are we going to believe that anchors are dragged across the sea that cut undersea cables here? But I think one of the things, China knows they're at war. The question is, we kind of equivocate on it as a peace-loving nation. But one of the things I want to make sure we all do realize is that the engineering in R1 is exquisite. The optimizations that they've done are really impressive. And I don't think you can get away with the facile explanation that the Chinese just copy and we're the only innovators. We have to wake up with the respect for our adversary and realize that we are competing. But they absolutely did steal a lot of that through distillation of the models, and perhaps they stole even more. And then you can look at the GPU sales growth in Singapore. It's a tiny island nation. I'm pretty sure there's some sanction invasion going on there. And we have to realize that the AI race is winner take all, and it's going to be a whole of nation effort that extends well beyond the DoD in order for us as a nation to win. And that M-Day was yesterday. The time to mobilize has come.
Thank you, Shyam. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you. So, my question is,
by the way, Dan, we don't
talk about, are you surprised at all?
Can you repeat the question? We didn't hear you. Thank you.
Yeah, are you surprised at how quick these sales cycles are actually taking place from when a customer first meets Palantir to now deploying AI initiatives? I mean, does that surprise the team at all?
I would say I'm not surprised because of the energy we feel on the ground in talking to customers and the impact. Shyam shared some examples, taking, a back office process from the largest banks from 5 days to under 3 minutes, taking what used to, automating a process for an automotive supplier from what used to take 100 hours to be automated with just a human check, and seeing the reactions of those customers when those are implemented, and seeing the impact, and seeing them wanting to move quickly, seeing them wanting to start quickly, expand quickly, and essentially stay ahead of their competitors. Like, feeling that energy and feeling that reaction on the ground, I'm not surprised because you feel it. It's tangible.
What surprises me a lot is just, customers and especially countries are just reacting completely differently. So in broad swaths, American companies have approached this revolution in a very pragmatic way, which is, so we had all these, experts saying that what you ought to do is buy a large language model and install it on your enterprise. And customers are like, great, we'll try that. But we're also going to try Palantir. And there's really no ideology in aggregate in this country defining how people do things. It's about output. How quick is that output? And there's a lot of communication between enterprises in America, so especially in sectors. So people talk about what's working and what's not working. And if in distinction, if you look at Europe with 13% of our business and 4% growth rate last year. So compare that, it's like more than 10x better in America in US Comm, right? And what's really happening there is people are reading literally basically PowerPoints of how you did tech installations in the 50s. And that's what they're doing. And what is jarring to me is that, you just see radical adoption from some clients. Again, you do have some people in America who are still doing science projects, but it's, how could it be that one set of companies in one geography adopts, and in a very culturally similar geography, people are just like, yeah, okay, great, but that's not how we do it. And so and this, by the way, is not just, we talk a lot about U.S. commercial because we can't really talk in detail about what's happening on the battlefield. But the battlefield, and Shyam could talk about this basically forever, that this is basically, we enjoy it. It's equally divergent. It's like you have cultures that are like, we have to fight in a way that suits our culture, that suits our ethics, where we have a primacy of winning and a primacy of maintaining our values. And those cultures are rebuilding how they fight, rebuilding the things that they think are valuable, looking at the evidence of what worked, what didn't, what was the cost structure. And meanwhile, there's just a lot of people who are just like, yeah, but that could get away in the way of vacation. And so it is really, really jarring. I think one of the things I am sympathetic with when investors look at Palantir is like, yeah, but it's very hard to know because people are going on different paths. But yeah, in America, in aggregate, the response is, I expected this to work in X amount of time. You got it to work and beat what I was expecting in 1/10, 1/20th, 1/50th of the time. And by the way, the other thing that is super surprising is, 2-3 years ago, when we were doing Foundry or even some of our kind of more sensitive things in the military, I believe we were delivering results that were, in 6 months would have taken 10 years, and they were things that people couldn't do. But now, because of the time and the power, you can't really hide it as easily in some department of your enterprise. So what would happen to us in the past is we would do a pilot, we'd do an enterprise thing, and because obviously people didn't appreciate my charm, and there were no steak dinners, and we weren't laughing at your jokes, and we were probably saying the wrong things at the wrong times, that thing got stuck in some part of the enterprise. Everyone knew it was the most important thing about the enterprise, but no one would acknowledge it. And now it's just too powerful. People are like, yeah, don't particularly like them. They don't after dinners. They don't wear suits. Shyam's hard to understand for me. But the results are massive. And that's what's driving the results in the U.S. That's what's driving the 54 number that we did last year, and we're guiding to this year in U.S. commercial. That's what's driving the beat. That's what's driving our ability to really maintain our culture. By the way, it's also the rule of 81 really comes from this reaction to our company, but also because we can stick to our culture, our ontology of Palantir. We do not need 500 extra people a quarter. We can really power these things because the pull, when people actually see it, is enough to break down the institutional barriers, the political bullshit that often we were not able to break through in the past.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So my first question is about disruption. Palantir has been actually thriving when there is disruption from the very beginnings of the company, 9/11, coronavirus, supply chains, LLMs. Now everyone is really concerned about DOGE with the change of administration. I could imagine a focus on efficiencies, a focus on software modernization, digitalization could actually be a really good opportunity for you. I don't know if you can deep dive on how is Palantir positioned to that. And my second question, probably to Dave, but I don't know, Shyam as well. When you see this demand, where do you invest to make sure that you are prepared to actually execute on it? Is it talent? Is it sales? Is it engineers? Is it partnerships? What do you do to make sure that you can actually capture this opportunity?
Thank you.
Well, on the first question here, I think no one really knows, but we sense a huge amount of fear amongst the traditional system integrators and providers here, the traditional providers to the monopsony. But we're pretty optimistic, and I think if you look at my comments over the past, even my recent Senate Armed Service testimony last week, Palantir's real competition is a lack of accountability in government. These forever software projects that cost an insane amount, that don't actually deliver results. They're sacred cows of the deep state. You can think about D6A. It cost billions of dollars and it didn't work. Soldiers in
$6 billion. Yeah.
Soldiers in war zones preferred Palantir because it worked, and it happened to only cost millions of dollars. And I think DOGE is going to bring meritocracy and transparency to government, and that's exactly what our commercial business is. The commercial market is meritocratic and transparent, and you see the results that we have in that sort of environment, and that's the basis of our optimism around this. I think the work that we've done in government, it's deeply operational, it's deeply valuable, and we're pretty excited about exceptional engineers getting in there under the hood and being able to see that for a change.
We love disruption, and whatever's good for America will be good for Americans and very good for Palantir. And I think you got it exactly right. Disruption, at the end of the day, exposes things that aren't working. There'll be ups and downs. There's a revolution. Some people are going to get their heads cut off. Like, it's like we're expecting to see really unexpected things and to win. Basically, that's what we're going to do. See unexpected things, report expected things, and win. And we're planning to do that, and we're pretty optimistic about the U.S. environment.
And on the investing front, it is quality engineering, right? It's quality engineers, and you can see it sort of how we set up our comp programs, and obviously that does mean headcount's going to grow somewhat, but really it is the quality engineers, more than the quantity, and you'll continue to see us, do that this year. We did it last year, particularly in the back half, and you're seeing it sort of in the numbers in Q1 and beyond.
Yeah, you also, by the way, for the first time, people want to partner with us. It used to be partnership meetings were complete waste of time and BS, largely so people could fill out a report that they met with us kind of thing, like high school dating for nerds. I met with them, perfect, I'm not going out with them. That was our experience with partnerships. Now, in the last couple of weeks, I've had real partnership discussions because a lot of these people own verticals, have to deliver, they're under a lot of pressure, and people know how good our products are. And last not least, what we're really investing in my view, is we have a truly unique culture. I visit with companies every week. I've been doing it for 20 years. I've never seen a company or a culture anything like ours. And that's what we have to fight to keep. And every single Palantirian is special. Everyone here is doing something unique. We need to continue to attract and retain people who are different, think differently, are different, and get them focused on the world's most important missions, building products the way we know how to build them. And that's our primary investment strategy. And it's not actually a question of money, which, means that's how we crush the margins. It's about talent and, just building really great things, the things you ought to build, not the things you're supposed to build, and getting them to the front line.
Thank you all. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
We're doing it. We're doing it. And I'm sure you're enjoying this as much as I am. Let's not talk to analysts about the burden of being right, our burdens of investing in ontology, our burdens of actually looking at the math, the burden of reading what the rule of 40 is, the burden of being honest about what an enterprise software company is, or the burden of explaining to your friends that you're really happy. Maybe we should just stop talking about it. I'm very happy to have you along for the journey, and you are partners for us. Every Palantirian, we are crushing it. Everyone else who's listening, we are dedicating our company. We have dedicated our company to the service of the West and the United States of America, and we're super proud of the role we play, especially in places we can't talk about. And we love our success in the U.S. and globally. Also, we are doing in the United Kingdom and many other places. Palantir is here to disrupt and make the institutions we partner with the very best in the world, and when it's necessary, to scare enemies and on occasion kill them. And we hope you're in favor of that. We hope you're enjoying being a partner, and we're really happy and very, very focused on what we're doing. Thank you for your time.
Thank you. That concludes Q&A for today's call.
Okay. That's honestly what I expected. We sat through the whole call here. I'm just writing my notes down. I mean, it's nice to get those tidbits of the things that they're doing for their clients at the enterprise level. And these are across huge organizations. It's not like we're just taking one tiny team and then, extrapolating those results, right? They're making real efficiency changes, weeks turning down into minutes, hours to minutes, or, weeks into days or weeks into hours. But I guess I do have a few notes here. Basically, there were a couple questions I think that came up that were interesting and are top of mind for a lot of folks. So actually, 1 second here. I'm going to refresh this. All right. So for those curious, though, need to look and read up on the results. Earnings are on the investor relations website. I did see some comments in the chat. Some folks, if it's not loaded yet, it should be there for you. If you want to rewatch the call for Palantir, of course, that's going to be stuck on my live stream too, because we watched it together. But you can also go to Palantir's own YouTube channel as well and rewatch the whole call there, listen to the questions. So the beginning portion of it, we of course talked about the great financial results. I mean, they speak for themselves. And if you were here before we were going over the call, then you shouldn't really be surprised either by the information and the tone of the call, the way they were talking, the excitement. There is some very interesting things though too with the stock. We're over $100 per share now, up 22% on the news after hours. This has just been continuing to climb here. We'll see how it ends up morning of tomorrow, considering this is still after hours activity. So we'll see on the official trading day chart for that it is. So for the earnings call, we just sat through it here for almost 50 minutes. Very happy management. Their introduction, of course, with the business results. We've read through the reports here, really focus on the United States side of their business. They did mention Europe, and Karp had some very specific numbers too about them being, 14% of their business, growing at 4%. So it's not something they're highlighting, and you can tell in the way that they're highlighting certain aspects on the investor relations presentation, but still very important that they still think about them and still continue to focus there. But it sounds like a very big cultural thing. So now starting with the questions from the investor relations call. So what's so unique about the ontology? How does it give you an edge, and why your competitors can't make it too? It's actually a good first question, especially if there's a lot of new eyes on the company. So not necessarily prospective customers are jumping in on their calls, but I think it's important for even just the investors to understand. And even if you're not invested, if you're just wanting to know about the company, it's important to know what is differentiating them, and are their competitors going after them? And they really just hit the nail on the head, the ontology. So this is the thing that got my attention when I first heard about Palantir. Ontology, essentially, it's a way to handle your data plumbing. And this is data plumbing from not just how clean your data is, but also the security systems around that. How do you manage that? And then at scale, how do you do that? And how it actually kind of worked out for them when AI came out, LLMs just started becoming more mainstream. And then people are figuring out, how do they use this with their data? You could copy and paste something in, right? And just go at it, right? You could technically do that and not smart at all and not secure. But the ontology really is that big differentiator there. Now, the reason why people can't build it, and Alex Karp and Shyam Sankar talked about this as well, it doesn't make sense to do it, right? Unless your business is around building an ontology or a system approach to clean up the systemized approach to clean up your data, get your data in a secure way with security controls and all those things around regulatory frameworks. Because, they were working early on with the government. And so you're applying this where there's different slices and dices with even the same organization, so huge like the United States government, that you have to have these controls in. Now, in a microcosm at a company, there's also these kind of permissions and such. But at the scale of when you're bringing in new data sources and then you're interacting it with like an outside source like an LLM, it does bring in that complication here that Palantir seems to handle in a systematized way where they can apply this to their customers. So it's such a unique product, really, essentially, because if you're running your own company for your own business, why do you need to do this more than once? But people are finding out now when you're interacting with these LLMs, it's becoming essential. So you can take that approach of maybe building out your own LLM and then knowing the security controls around that, or buying an LLM and then keeping it for yourself. But Palantir seems to have something that they can apply across the board. Then the other big question, especially around current events, DeepSeek, how does that look to Palantir? Well, they've already been talking about this. DeepSeek is an LLM. And yes, it came to be from China, and maybe certain ways that it was developed are not necessarily the way that you'd want it to be, or legal, or whatever you want to call it, right? They did it so cheap, right? So they shook things up. But Palantir's going unscathed, right? This is actually fulfilling a prophecy almost of what they were talking about. Palantir is making sure that you can operationalize LLMs, and you need to have security and controls around that. And then you want to be able to maybe even compare LLMs. And do you want to buy your own LLM and manage that and figure it out? sure, maybe that's an option. But also maybe you want to put your hands out there, see how do these other ones perform. Maybe for certain use cases, it can change up. Maybe you don't want to pay that much for a certain one, depending on the usage and the energy costs and all those things associated with LLMs. So I think it's just important that they at least acknowledge the DeepSeek kind of narrative right now. And knowing that Palantir can tout, they were the ones who basically said, well, we're in the spot that's actually helping you. If you're just all in on LLMs, like, cool, right? It's going to become cheaper to train over time. But now you're going to be competing against a bunch of other people who are in that similar environment. But the customers truly just want to make usefulness out of it, right? They want to get value from it. You don't just hand it over, right? And you don't just give full access to your data sometimes, especially if you're getting something from China. And then they, of course, talk about the geopolitical implications of it as well. The AI arms race, essentially, the economic wars that have been leading up to this, or basically have been around the whole time. And this will no doubt be something part of the trajectory and future of the world in general. So if someone can come up with something similar to Palantir, it may take some time. I guess it sounds like management is not worried at all. And for those who've done the deep dive into Palantir and into the products and even looked into working with it, build.palantir.com, you can make a dev account and do it for free for a certain amount of compute, I believe. Then yeah, you'll find yourself that it's not really a product people are even lining up to make, because if you're building your own business, you're just focused on yourself. So, but they've made it work and turned it into a product after all their experience with the U.S. government for decades. Now, the other question came in, Dan Ives. I know if you're on the call, it was kind of what do you say? Basically, his connection was there and you could see him walking. So it was kind of funny that we saw that there. But for Dan Ives, his question essentially, he was kind of answering his own question, essentially saying like, let's see here. Are you surprised at the quickness of the sales cycle? So the assumption of the sales cycle is quick now, and we can infer that based on the information we're seeing with closing more customers now. But either way, it was a leading question. But I mean, essentially, it sounds like they're not surprised. They're on the ground floor. They're running the boot camps. Ryan Taylor said it himself. He's not surprised because of what he's seeing on the ground. So that's something I guess, maybe a metric can't really provide, but we see in the beginning of like Palantir Pre, this is one of these events where they go and test out these different, basically they're bringing customers or prospective customers and building out use cases and how fast they can go. And then I believe there's also, there's no boot camp here, but also boot camps are doing the same thing, but it's similar to DevCon as well. Like this is going to be a factor later on and for sales cycles. If someone's building out a company and, if they're going to scale up how much they're going to utilize Palantir, this is the point to try it out. And then Mariana's question too, around disruption, the new administration. I'm not surprised as well by the answers. They are very, what do you call it? They're looking forward to the new administration, the cost efficiencies they're trying to save. And Palantir, they're not worried, essentially. Karp did say, though, that some heads will roll, especially if you're one of those add-on costs and you're not technically trying to cut costs for the government for your business, right? It makes more sense to just bill more, inflate prices, things like that. Palantir, on the other hand, is literally demonstrating the value of finding efficiencies, removing redundancies, and all doing this while still in a regulatory framework that works for the government to run more efficiently, but securely and safely as well. And then her other question, it was like a two-part question. Are they going to invest? So this was something I've been very curious about as well. So they got a ton of cash sitting. If I scroll down to $5.2 billion. So there's always going to be the question, what do you do to grow faster or whatever, to expand margins or anything? And essentially they said they're going to look for quality engineers. That's the big thing. That's the tactical answer that they said they're going to do. So they're going to just get more engineers. I'm assuming that means more implementations, get people up to speed, get better with the software. I'm talking about the customers. So these engineers, I'm assuming, are doing that, but also engineers who are improving Palantir's products as well. So there's both sides of the equation here where quality engineers are, internally and externally going to drive the needle. I'm assuming on the sales side, customer customer knowledge around how they can use the products, but then also Palantir improving their products, making new use cases, making new ways that the product can become more efficient and scalable, as well as doing this across more industries and maybe more security frameworks as they expand more, even if US is the primary focus right now. So those were the big questions coming from the sales, not the sales, from the earnings call. And we already went through most of the presentation. Just for housekeeping here, I know we've been a long call. Thank you for everyone who has attended and joined. I'm probably going to cut it off here soon, but I'm going to make a video on the results of the earnings, some also on the earnings call as well, like the questions that we just discussed, just so it's a little bit in a cleaner format. I typically do this. If it's not posted by tonight, it'll be posted by tomorrow for sure. But I definitely appreciate everyone coming onto the live stream. I only do this quarterly. Just to show off. So many of you came in to tune in. I know a lot of you were here for the results, and this is the drop-off point because we got the call done. But I'll see you next quarter. I will keep posting the Palantir videos just to make sure that we stay up to date on the information. And remember, this is not investing advice. This is honestly just covering the company, right? If you look at typical valuation models, right? How are you going to apply a typical valuation model to something like this? Palantir is not a typical company. It's not being priced as a typical company. So yes, everyone will have their own opinion. Everyone has their different risk tolerance. It doesn't mean you go all in. It doesn't mean you don't go all in. I don't know. That's literally up to you as an individual. But I think this is also what makes it so interesting and also so grateful to have something like this to cover and share, because it's interesting and it piques my own interest to look into the company, the things that they're doing, even their customers, the results that they're bringing, the product and how it's born, and then even the journey of, they've gone public. I've been covering this channel now for a couple years. It's going to be 2 years. Yeah, 2023, the channel started. So a lot more to cover in the future, it sounds like, and management is very, very optimistic. I'll keep this sentiment here. And, when I make the wrap-up video as well, I think that's very important to point out that Palantir and management overall from the call, they're very, very positive in their outlook to what's to come financially, but also, qualitatively for the things happening with the government, as well as how they can deliver onto the needs of the market that they're seeing today. So thank you again. I'll see you all in the next video.